Good morning, everybody. Afternoon. Good morning. Get started in just a second here. Just logging into my stuff. Save the markets. The markets. All right. Okay. Here we go. Let go. All right. We're here. How's it going? We're just sitting in a little pineapple under the sea. We're SpongeBob as the market's selling off into no man's land. Let's turn this music down. I'm just going to turn it off. All right, let's see who we got in here. People starting to roll through. Secret stream, I just kind of popped up out of nowhere. Looking at the S&P 500 right now. We're at the lower daily implied move. Do I see AVGO getting back to 339 today, tomorrow, the next day, the next day after that, the next day after that? Maybe. We'll pull it up. We'll pull up AVGO. Bajoomba. Right now it's trading under its 2 standard deviation move, or right here, kind of just chopping sideways. All right, give me a second. We'll do a better analysis there. Keeping an eye here on the futures market because I am interested to continue to trade this. This is NQ. Our big selling really took place right over here as this consolidation took place. And as you can see, we kind of came right back into that volume weighted average price and kind of found some resistance. So if we can kind of get through this level, I think that opens the door for daily VWAP, which is up there currently at about 160. So 25,160 on NQ. As far as some of the 0-date levels go, I got to change my pineapple over here because I'm blocking some of my screen. We're at that 67.50, and that happened to be a area of concentration from a 0-date perspective. We had 67.50 right over here. A little bit below that, we have 67.25, which brings us down to the weekly implied move. So the main focus of concentration right here, that put wall for the day is at 67.50, and we're just slightly above that and underneath the daily implied move. So once again, for NQ, right, we need to see some of these semiconductors kind of step back up. We're getting some heat there in NVIDIA, right, down 3%. Broadcom down 5%. That's going to be the big weight on the overall market here. See, XLK is down 1.64%. Overall, kind of a mixed board there. So we'll see if we can break through that VWAP. And in the meantime, if we start to flush more, we can always look at the tick chart and see if we start to get some overextended readings, which we have not really gotten yet today. I think the lowest reading here was almost 950, minus 950. As far as market net flow goes, market net flow has been bearish the entirety of the trading session, basically. We had the red line above the green line. Now they're both kind of flat-lined here as the market's also been just going somewhat flat. Let me take a sip of my coffee. Down about 72 basis points in the S&P 500. Do I have any instructional material on the anchored VWAP? I don't, but there's a trader, Brian Shannon, that has a book specifically on the anchored VWAP. And his stuff is great. Like, he kind of popularized the time-weighted average price. Actually, a lot of people think that that's his indicator, but the VWAP has been around for a long time, especially time-weighted average prices. But he definitely, I think, called it the anchored VWAP, where you're anchoring it to a specific point in time, and really popularized it, and has some insanely awesome strategies around it. So I would look at Brian Shannon and look at his book. I have both of his books, and everything that he does within the anchor VWAP, I do. And so that's where all the answers are. Perhaps I'll put out a video on how I use it specifically around just VWAP, but for now, that's a great resource. Okie dokie. All right, so it's been now 3 weeks without touching the weekly implied move. We still have tomorrow and the next day, and we're like right here in the S&P 500. So we're right by that weekly implied move. So the probability of it would be technically coming down to the lower weekly implied move. If we don't tag this, you know, that means, I mean, chances are we're not going to hit the upper weekly implied move unless this, you know, the market really just starts running. Okay, so there we go. There is our lowest tick reading of the trading session. And now we're getting this. It's going to be near that minus 1,000, which is more of an extreme reading. That's what I prefer. There you go. We're getting that minus 1,000 as NQ is breaking to new lows. And these are typically the areas where I'll try to just take a stab with an MNQ and try to scalp out about 10 to 20 points. So if we come over here to NQ, unfortunately, what I don't like is we're getting that reading on a new low and a potential break. I'm not a big fan of that. I prefer it to be more like a capitulatory type move like this and then get the reading. But needless to say, we got a minus 1,000 reading. We're at that expected move, right? So chances of getting the 10 to 20 points on the MNQ are rather high. So you can see we're bouncing right over here. I got my 20 points. I'm up 30 bucks on this already. Give me a second. I'm going to go ahead and put my stop up at 10 points. Oh, nope, there it goes. I'm stopped. Okay. So that was a quick $25 across all my accounts for the futures market, just based off of that quick little tick fade, okay? Now, ultimately still, I want this to come back up here to tighten up and then break to this. That would be more ideal for me. I'm not looking to short at these lows. I'm not really looking to short at all. I don't really short unless if it's like super clear, but I prefer longing. I unfortunately got stopped out there a little quick. But that's okay. I only did one MNQ. How the Uber long working? An Uber long, I don't have Uber long. I traded Uber. I day traded Uber. I'm not too sure what you mean. We can pull up Uber if you want to. Yeah, I think I day traded it around here and played it up. But I get out of those things. It's pretty common. Yes, sir. But yeah, you can always check my performance if you want to. You can go to the United States Investing Championship website and you can pull up my name there. And I get verified every month. So you'll see that. I actually got to send my November results in. And then December's almost over, so they should have my year-end performance by the end of January. The tick chart, I just look up the NYSE tick. So I just go $TICK on Thinkorswim. I don't use it on any other platform. I use it here. So if you have TradingView, you might have to look up NYSE tick and just see, minus 1,000, plus 1,000. There's a bunch of different tick charts for different products. I just tend to use the NYSE tick. What's up, MS Trader? A lot of people are wondering where the Santa Claus rally is. And just so you know, if I remember correctly, I'll have to double check, but Santa Claus rally typically comes the last 5 days of December, like the last 5 trading days and like the first 2 of January, if I remember correctly. It's good to hear. It's good to hear, MS. Do I trade with my own money? Yeah, I trade with my own money. I trade with a prop firm. I trade with, all kinds of different things and vehicles. My own money is typically traded within just the equity space. So, I mean, in the United States Investing Championship, you need to trade with your money. It's, I guess you can use somebody else's account, but
we'll be on the lookout for the results of the
you have to
auction.
Give them the broker statements every month.
Just going over the auction
or every
history,
quarter, however you want to do it.
Dow yields will be selling $13 billion of the 20-year bonds. Auction history, last time we did see a high yield of 4.706%. And going into today's auction, auction average for a high yield of 4.763%. Looking at the tail, previously at 0.2 basis points for tail. First 6 auction average today have a stop through at 0.5 basis points. Bid to cover, previously 2.41 times versus the average 2.65. Primary dealers, they took 11.4% of the last auction versus the 6 auction average today of 11%. direct demand was at 29.1% versus the average 25.3%. Indirect demand at 59.5% in the last auction versus the 6 auction average of 63.7%.
Today is why we drop it today. So I would say today is really a focus on flow, right? We're underneath the gamma flip line.
Bostic says GDP growth is solid, and he does expect that trend to continue into next year.
When you're under the gamma flip line, right? Selling, but get selling, so you can get some directional moves pretty heavily. And a lot of that selling is taking place within the chip space. So you can see things like, once again, NVIDIA getting hit hard, and AVGO hit pretty hard too here as well. So that's pretty, big lag. We have Google, right, also down 2%. So a lot of this is coming from just flows, and then some of the larger market cap names taking quite the hit. I mean, 2%, if that's quite the hit, I guess,
And further from Bostic says it is less clear for what will happen on the employment side.
See if maybe we can flush through here and then create another kind of a opportunity. But if we can't get down this way, I'd still be looking for price to kind of firm up. Take a look at SPY. We're still just doodling around. When this big kind of candle took off to the downside, kind of the opening, just right around the opening VWAP over here, you can see that it's been holding as this level of resistance multiple times. So once again, getting through these levels can change kind of that psychological feeling in the market and get significantly more bullish. And maybe we can then just pop up from those levels. But it just hasn't proven itself yet. And overall, we are still below a declining 5-day moving average, albeit it's a little frothy out here. And there's been no tag of the weekly implied move now for 2 weeks. Okay. Okay, doke. Arte choke. Let's see. Get any alerts. We had a ARM just hit a 2 standard deviation alert. Another semiconductor ARM. Look at this thing. This thing is straight down. 114.06. So we just hit it right here. Got this alert at 114.06.
For Novartis and Roche.
That's crazy.
2 companies are nearing deals with the White House on drug pricing, according to Bloomberg.
Basically a straight line down. And then this is the 2 standard deviation move. So I like these type of trade. Like if the market starts to pick back up, you can maybe see some of these, see a little bit of a rally. Now I prefer to see it underneath the 2 standard deviation move, hold this trend, and then potentially break back up to it. And I like to play those shorter term little scalps in the market. So we'll see here if it can do that. Today I did trade Pinduoduo, PDD. See what that's looking like now, but I'm out of it. But yeah, so right here, so give you a better example. See this strong trend to the downside, and it was underneath the 2 standard deviation move. When it started breaking, man, it led to a nice little pop up here. I sold the bulk of it just right into this area, and then I got out of it, more of it at the daily VWAP, and then I was basically out. I am out. I don't have a position in it anymore, but that created a nice little intraday move from, about 2% in a very short period of time. And then from that point, it just sunk back off, and now it's underneath the 2 standard deviation move again. Another reason why I like this is if you pick up the daily time frame, you can see that this thing is getting absolutely crushed. So sometimes when you get these large moves to the downside, they result in, shorter term bounces in pretty near future. AVGO is also underneath its 2 standard deviation move today. This one's a little bit more choppy, and it's kind of moving with the rest of these products. And this one had earnings just a couple of days ago, but it's also been kind of just a straight line down. And we're outside of the weekly implied move. So we got outside of it yesterday, and we kind of came back within it. Nice little pop back. This is a pretty substantial break. So, you know, got to proceed with a little bit of caution there. But overall, yeah, it's just doodling around its 2 standard deviation move. The news that you're hearing is from Thinkorswim. God, what is the name of their source? I forget the source because they did a deal with Thinkorswim or Schwab a while back. They brokered a deal with this news agency based out of the UK, and I forget the name of it. But it's built into Thinkorswim. Whimsical. I don't look at the depth of market when I'm using the tick. I'm thinking through just the capitulation, and it's pretty much just a quick scalp. So when we get those extended readings, that's kind of when I go for it. So let's go back over to it. When did we get that kind of capitulatory reading? When was that? Typically, sometimes I'll put in a slower, or I'll put in a faster chart, like a 30-second chart, but lately I've just been using the 2-minute. So this happened at about 9:45, 9:46, 9:45, right around there. And yeah, so right here. So I caught a quick 10 points, and then we led to a little bit of a bounce. Well, okay, big deal, right? 994 to where was this? 994 to 36. So still like 40, 50 points, up into that range. Not too shabby. I just kept it in for about 10 points, I think it was, or just slightly above 10 points. Because I did one micro, and I got, I think, $25. All right, so usually I like to scale. I like to add, do more, but I'm up on the day a lot already. So I'm not trying to give back all these profits. Tick has been hovering at minus 1,000 for a while. I don't know what tick chart you might be looking at, but this right here is, we just hit it today for the first time a few minutes ago. And then, yeah, I look at it on the minute time frame. I don't, if you pull up like a larger, like a daily, like it doesn't make, I can't look at a daily chart. I'll look at it intraday perspective, and then go from there. Got a big wall over here at 676. So if we do start to pop up higher, I think it might be worth just keeping an eye on 676 as potential level of resistance. So I'll write this out as a GEX level. For whatever reason, if we start like ripping back to the upside, be aware of the 676 level on S&P 500. On the SPY. Let's go back to ARM, see if it's doing anything. I'm kind of hesitant with the semiconductors today. Let's see it kind of snap lower would be nice. This is a live show. The items are different, but the show is marked live. The items are different. I don't know what you mean by that. But yeah, it's live. I'm talking to you right now. Unless if you're just like not at the live marker and you are... so, you know what I'm saying? Like you got to go to the live setting and not go start it from 2 minutes ago. Shout out. I'm trying out a prop firm again that I failed over and over because I was just trying to make like huge gains from it. And I'm giving it a shot. And I'm not going to talk about it specifically right now, the firm exactly, but it's definitely a difficult one. And it's going really, really well from just some subtle changes. And then I'm also back at Tradeify because they opened up some new plans and that they allow me to get sim profits or move me back to live again. Because at Tradeify, I did the 2,500. I spent $2,500 there on 5 accounts and ran that up to my max sim payout, which was like 80,000 at 80% or 90% or whatever it was. So then once you
The
go
initial
live
20-year
to
bond
those
auction,
accounts,
4.799%,
they don't let you get sim profits, but now the new plans
4.799% for the one
apparently
issued.
allow for it. So I'm going through their test right now. On the select plan, I'm only doing the 50K accounts. And here, I'll share with you what that looks like now. Let me pull it up. I just started this month again. If you want to try out, try these future accounts out, you can. I have a, where's my journal? The link is in the little pinned comments. And then my code, the affiliate code, will get you whatever the top promo is, which is just FOM. All right, so here is the performance and the journal, which I like from Tradeify. It's right here. Shakus. So this is 5 accounts. So all the amount of trades divided by 5 if you want to know the amount of trades. But there's been a lot of scalping.
Doesn't inflation is
so this is where I'm at right now, and I'm like still about $100, a little bit less than $100 away from passing the test. Prior on my previous Tradeify, I could do I just went direct to funding, which I love because then you can start making money basically right away. But unfortunately, that's not an option for me anymore.
High yield comes in at 4.798%, so it does stop through by 0.1 basis points. Bid to cover ratio 2.67 times. Primary dealers take 12.57%, directs take 22.24%, and indirects take 65.19% of the auction.
All right, so we're getting back up into this area. Once again, right, we get hung up at this volume weighted average price from when this real big sell side took place on this 2-minute time frame here on NQ. This right here was one of those frothy tick readings, and we got a nice little bounce from it.
Over the 20-year bond auction once again. So US did sell $13 billion of the 20-year bonds at a high yield of 4.798%. That did stop through when issued by 0.1 basis points, and it does compare to the prior tail of 0.2 basis points and 6 auction average of a stop through of 0.5 basis points. Bid to cover ratio 2.67 times, does improve from the prior 2.41 times, and is above the 6 auction average of 2.65. And having a look at the breakdown, direct demand at 22.24%, does drop from the prior 29.1% and beneath the 6 auction average of 25.3%.
Jeez, dude.
Indirect demand rises to 65.19% from 59.5%. It is also above the 6 auction average of 63.7%. This left dealers with 12.57% of the auction, a bit above the prior 11.4% and the 6 auction average of 11%.
What I do with Tradeify? I didn't do anything with Tradeify other than just or like what do you mean? Like what did I do to get those profits for Tradeify? I made a video about it, exactly what I did. But I bought like 5 of those accounts, right? The top accounts, the 150K accounts, direct to funding. It cost me $2,500, and I traded them very slow. I didn't get my first payout until 40 days, a little bit over 40 days, and that's when I made that video. And then from that point, I got another payout, then I got another payout, then I got another payout, then I got another payout, and then they bumped me to live, and no longer allowed me to get sim profits. If that makes sense. Because they it's kind of their hedging mechanism. They're not going to keep paying me sim profits to trade a sim account. You know what I'm saying? It ain't going to be the case. But apparently they just opened up select accounts now, which now allows me to go back into being able to make sim profits. However, if I start making profits, they very well may take that and be like, okay, we're going to move you to live again. And I'm like, all right, well, then I'll probably just try to take the profits out of it and not trade with a live account with them. I'm not much of a fan of, because their rules and restrictions and their payout policy changes dramatically on live, and it makes no sense for me to waste my time trading a live account when I could just trade a live account with my own money. The benefit of these prop firms is being able to extract money from the sim. Now that's my case, right? That's not everyone, because there are some prop firms out there that allow you to just like move to live really quickly, and that makes sense for people. But from my personal preference, it doesn't make sense for me to do that. Like, right, I'm not trying to prove myself in a live account with, against in rankings on a prop firm. I want to make the most amount of money in the shortest amount of time with the least amount of risk. That's what I do. That's what I focus on. All right, ARM is still down there at the 2 standard deviation moves. No bounce, break of trend. I'm not really too interested at the moment. Let's look at AVGO, see if anything's picking up over here. No, not really. These guys really need to kind of pick their head up in order to show any signs of anything. NVIDIA did, and NVIDIA is coming back to its volume weighted average price. So that's definitely going to be helping the market there. And then Google is kind of getting hung up at its daily implied price right over here. So now, right, some people might look at this as like inverse head and shoulder. Oh, it breaks up, maybe comes up. I'm not too much of a fan of structure on just a minute time frame like this, but that's a possibility. And overall, what are we doing? Well, we're just went on a monster run and we're pulling back a little bit here. Heavens no, right? Go figure. You run up this fast, that far, that quick, you're going to pull back, right? Okay, here comes NQ back up to that level. Now, what I would prefer is for it to kind of go sideways for a little bit or pull back a little bit and then put in a higher low, because right now it's just been kind of a straight shot up since that kind of capitulatory tick reading. So if it just blasts through here, you know, I miss it, right? But if it can pull back, put in a higher low, give me some sort of idea for risk, that makes more sense for me. ARM looks like it set up. Well, I was looking just intraday for ARM. I didn't look at the daily chart or anything like that. So if you want me to look specifically at charts, like this doesn't look good on the daily time frame at all. So yeah, you can create little bounce opportunities, and that's when I like to look at those 2 standard deviation moves and, you know, like this. Like, oh man, this is a very sharp decline. You're probably going to get some relief at some point. I would prefer it under the 2 standard deviation just based off of probabilities, right? You think of it as a distribution curve, a 2 sigma move, right? 95% of the time we finish inside the 2 standard deviation move. So when you start breaking outside of it, it's just telling me that the market really got this wrong, right? And that's when I like to execute, when, you know, really there's a lot of fear, a lot of panic. And I start small because it could keep going. It could keep falling. So I'll take stabs here and there on things like this. Amazon, let's see here. Yeah, Amazon's getting back above its daily volume weighted average price. This one had a nice big pop. This must have been some news or something. I didn't catch that. Bam, look at that thing. So I'm assuming that there was some news. Pull it up, probably news all around here. And we're above the VWAP and we're positive on the day. So yeah, Amazon's looking pretty fine here. And then overall, where are we, right? We saw a nice big bounce from this trend, and last year's closing price is the dash line, and we pulled back, right? Let me actually even pull up Meta. Yeah, Meta was one that we talked about the other day. This one bounced nicely here. I think it'll be better if I show you. I'm still kind of waiting to see how this does, but we can pull up my other side-by-side view and go over some of those mega cap names and where they stand within their weekly implied moves. But I'm kind of waiting to see if this puts in a higher low and does what I kind of wanted to do. Because then maybe it might set up for me to just do an MNQ contract in these Tradeify accounts, maybe it blasts through, and then I can get my qualification to move into funded on their accounts. My other accounts, I'm probably not going to trade these ones anymore today because because it's just a great day today for those accounts. So I'm not going to really, I'm just going to reset, you know. I don't need to be trying to catch every move. What's up, Bambino? Mara, yeah, we can look at some of those. Yeah, crypto stuff is doing pretty decent today. All right, we'll pull up Bitcoin. Oh, Bitcoin actually reversed. It was looking pretty good. Holy moly, yeah, that was a big reverse. So that was looking good. Not no more. Let's take a look at gold. Gold's holding up very well. And then I heard silver's doing great. Insane move on silver. That's up almost 6%. I almost want to just take a stab short at this point. That's crazy. Like a short term, just like lotto type, you know, short. This is crazy move. That's insane. What a move. So, you know, what has a really strong correlation is the miners. So if I look at GDX, I'm actually pretty shocked here. Miners aren't just exploding higher with silver. They're not looking bad. They're still kind of consolidating, but it is interesting to see, you know, silver and gold doing very well in this environment. Like what's going on here? You know, there's something going on.
Update on trade.
Oil saw a big move down, then we saw a little bit of a reflexive bounce today.
Reach a provisional agreement on EU Mercosur safeguards.
Pretty interesting. I'll pull up more in a second. Let me just keep an eye here on NQ. All right, so NQ, right? We came up to that VWAP. Guess what? It's holding still. And now, like, are we going to be putting in a higher low? We'll see. Yeah, you don't need to agree on the silver short. Would you go long right here? What's more stupid, actually? A shorter term short position or a long position right now? You tell me. And then you got to tell me time frame too. All right. Still pulling back. Well, then that means, Lumpy, that you wouldn't be doing anything, which means the opinion would be invalid. Your opinion would be just, I wouldn't do anything. Right? It's always interesting, too. So an interesting thought on that is a lot of people have big opinions. So, for example, a lot of macro people have these crazy macro thoughts and narratives. But then you ask them, hey, well, how are you positioned? And it's completely different than what they actually are saying as far as narrative goes. What they trade, how they trade, completely and utterly different. And that is always something to pay close attention to. They'll be like, I think that this is going to do this and that's going to go do this. Okay, so what's your portfolio look like? How are you trading it? And then they're like long Disney stock. 90% long Disney. It's like, why does Japan matter right now if you're, you know, like all these narratives about all these things you're focused on Disney. I'm just using a random example. It doesn't matter. That's why narratives become very noisy. But to your point, not doing anything is also a good move. That's not a bad move. That's not a bad move. All right, so we're just pulling back from this volume weighted average price. I'm looking to see if we can get some sort of a higher low. Put your money where your mouse is. That's good. Yeah, definitely silver's long-term up. I mean, silver just hit another all-time high. So there's no arguing that. All-time highs are not bearish. Right? Not bearish. But that doesn't mean you can't fade, right? So in markets that are completely sinking with that same logic, that means with the same type of logic, like, and a lot of people told me, oh, you'd be stupid if you go long over here.
By the WSJ, so Bolivia bets on lithium and the US to end.
Oh, we're hitting new lows on the year. You'd be stupid to go long over here.
He's citing the Foreign Minister Fernando Aramayo in an interview. Says government is seeking financial lifeline from the Trump admin as well as opening its vast lithium reserves to foreign investors.
No higher low yet. Still coming off. So we'll go back. Yeah, so you see what I mean? So a strong move to the downside, and then like people don't want to go long. They're too scared to go long. So just like a very parabolic move to the upside, people don't want to short it. Or people are shorting it and they keep on covering it and keeps on squeezing higher. Right? So it's all about finding ways to take advantage of these kind of moves. And you know, silver, like today, right? Silver is probably a multiple standard deviation move if I would have had to guess. All right, let's pull it up actually. Daily, let's go to AsherBot and I'll pull up the expected move. Let's go eyeball, range, SLV. This is just for daily. We can do weekly too. Yeah, 2 sigma is at 6101. So not quite there. Not a 2 sigma move yet. 6101 is up here. So I would say, yeah, right up here would make more sense. 6101. That's a 2 sigma move. 5937 is his 1 standard deviation move. So go figure. Silver's moving 2 standard deviations basically to the upside, while a lot of other kind of heavy tech stocks are actually coming off that amount. All right. So NQ still can't put in that higher low, so I just stand aside. Let's pull up a tick chart, because if this thing gets frothy again, it might offer up another opportunity to just take a little scalp.
Update here from the New York Fed. Reverse repo, so demand comes in at 10.36 billion, up from yesterday's 1.55 billion, is across 17 counterparties, up from yesterday's 2.
Yeah, it's definitely like a lot of just tight consolidations and moves higher. Yeah, no joke. You're absolutely right. A lot of flags. Very, very true. It's a lot of strength.
Just further in that piece
running.
from the WSJ on Bolivia, it does note the foreign minister said they've discussed the possibility of having a swap, taking the example of Argentina, as well as other measures, and hopes that will be ready in the short
Which is why it's not a bad idea to not do anything. Like, right, you don't go long here, you look for consolidations. And a lot of people would be like, yeah, I wouldn't short here either because it's too strong. Yeah, that would make sense too. Absolutely. But sometimes, right, so I'm going to keep an eye on this, but here's an idea. So if I go to SLV and I go to the trade tab, so see how silver's kind of coming off right here, but if I go to the trade tab and I look at just short term, let's go 2 days out, right, and we're looking at a chart, it's at about 60 right now. Let's look at like 14 strikes. Like for whatever reason, like if I wanted to just say, hey, I'm going to just take a very crazy lotto type trade and want to take like 1 contract or 2 contracts at like thinking that it's going to break underneath 58 or 57 or whatever the case is, maybe even go further out and try to like think that it's going to have like a capitulatory type reversal. Very low probability, but it's controlled risk, right? You can even potentially look at spreads to make it less. But that would be kind of an idea. Or like go into tomorrow, right? Or, on this expiration and then see what these look like tomorrow. So if we get a continuational move to the upside, you can see what the pricing looks like then and just look for a very short term. Hey, I think that this, if the markets roll over, this might be taken with it. And then you could find a potentially shorter term type of trade in the market where you lose a set amount, like, hey, I'm risking $100, but yet you can make $300-400 off of that. The thing is, you can't add to those trades if you're losing. You can't add to them. And then 2, they're low probabilities, but when they actually hit, you only need 1 or 2 to win out of 5. And when it does hit, you're making money, if that makes sense. And that doesn't work just with like something like this, right? You can do that with the S&P 500. You can do that with various sectors, right? I don't really trade options. Walking through some thoughts. $10 million pennies. We're still holding lows of the day, so it's not really of interest to me at the moment. At this point, if we can break actually down to the lower weekly implied move today, I think I'll actually probably start taking a position in the S&P 500 and just hold it in because that would make sense for my portfolio. I don't really have much exposure now. I've been kind of taking it easy, and down there at the lower weekly implied move, going into maybe the potential of having some sort of Santa Claus rally in the last 5 days to early January, getting through OPEX, maybe even going to that 7,000, which we got pretty close to. I'd be targeting the lower weekly implied moves and then starting positions then. At least to have some exposure, not like 100% exposure, right? Not 100% exposure, but just to have more exposure into something that's a beta of 1. Nice, Smelly. Two to three. Yeah, Tom Lyons, you can, for prop firms, you can start with one, get used to it, try to get a payout, and then try to scale up after that point. You don't need to buy a bunch of them and copy trade. That's just what I did. It's actually smarter if you just do one, try to get used to it, learn it. When you feel more comfortable, maybe do two and copy trade, and then try to scale up from that point if it makes sense for you. But yeah, you don't need you just get one. You can spend $50, right, on the Tradeify Select account, try it out, see how it works. You'd have to check on Tradeify if the data is included. I can't remember. I think I used to pay for it. I don't know if it's included now though. I have to check. If so, I gotta go through all my stuff. I have so many random bills. Tesla, let's take a look at Tesla. Tesla looks very bullish. Very, very bullish. Let's go 2 years. I mean, you can't argue that a new high today was set. Once again, a new high is not bearish. In fact, it got almost to that 500, which was a level that I figure that's going to probably hit. But going into 2026, I mean, look at this thing. Yeah, you're going to have these, kind of flush out sort of moves or whatever. But, I mean, this is one of the better looking mega cap stocks. There's a couple of them, but man, if this pulls in a little bit, tightens up, this thing looks, imagine something like this going into 2026. Right? Looks pretty good. That's for sure. Now I just want to see how it tightens up and shapes up, right? I would love a base like this to build again. Can you imagine that? All these higher lows building right there. Bam. Blast off. Bam. Blast off. Blast off. Weekly lows for a possibility. Well, yeah, I probably for the S&P 500 position. Yeah, so I mean, you got to think. I'm talking in context of my portfolio, and I have like nothing on, so I don't mind getting a position into the S&P 500, and even if it falls into correction territory, I can scale in and around lower weekly implied moves. I'm not calling for that to go into 10% correction right now, but I would prefer, at the lower weekly implied move, and then just if we can get down there and then just start to scale in. I wouldn't mind scaling in right now, and if it comes down through here, scaling into actually a position in the S&P 500 just to have something on in my portfolio. Because right now, I pull it up and I don't got much. So my portfolio has been basically flatlined here for, last week. So. NQ ain't doing nothing right now. Still just keeping an eye. I guess this is technically a higher low, not one that I love, but that is a higher low right there. So I still would need this to come up and try to shape up a little bit more. But now you can really clearly see this is a level to watch, and that happens to be the VWAP from when this bearish flag broke down and we started to see actual sell side activity today. The two blue lines are volume weighted average prices. Tesla is a scam. Yeah, okay. There's a lot of scams out there, right? Things that they do weird things within companies, and yet people still make an absurd amount of money trading them. I don't know the internals of Tesla. But what I do know is even if it's bearish fundamentally, it is bullish technically, quantitatively. Right? I remember playing it down here. Imagine if I was like, just didn't want to take the position because, you know, oh, it's a scam, right? Imagine how many like trades I'd miss if I just got into the narrative saying, oh, you know, it's a scam. And especially with that just being an opinion without actually knowing any sort of fact, you know, of anything. And we don't know this. We don't know that. We don't know the internals of the company. We don't have that type of knowledge. We're just retail traders. Retail traders trying to make it. NVIDIA. There's all types of scam. I mean, the thing about, like, look at Oracle, dude. They switched their whole like thing into AI. How's that doing for them? Look at that thing. But that doesn't mean that I'm not going to trade it when it presents itself an opportunity. Like, you know, that was a nice setup over here. Now it's just falling flat on its face. What about when Facebook changed their name to Meta for the metaverse?
Just a quick update from News Squawk in terms of the schedule on Friday. So once again, the desk will be closing at an earlier time of 6:05 London time PM or 1 PM Eastern time after the coverage of the Baker Hughes ring count. And we've also posted up the desk schedule over the
James, that's pretty good.
Holiday is on the headline feed for you to read.
That's pretty good. Your GVC, GVR, TVSE holdings getting hit hard today in utility power news. I don't know, I feel like those are kind of tightly correlated to like the AI play, right? Like a lot of this AI, you know, stuff is getting hit, and I feel like some of these utilities are kind of intertwined with that. That's why we saw big moves with them in the first place. So that could have some potential effect here with what we're seeing. If I pull up utilities, which is also kind of rate sensitive, right? We've been kind of sinking off here. Energy is the top performer today after a pretty strong sell-off. So go figure, it sells off pretty hard and we bounce. Yesterday we hit a 2 standard deviation move. Almost a 3 standard deviation move. I was watching it over here. It led to a nice little bounce. Let's go back over to ARM really quick. I wanted to just see. Okay, there we go. So see how ARM is kind of underneath its 2 standard deviation move now. And it's still following this trend. Let's see if I can just redraw this trend here. Go up. There you go. So semis alone, I feel kind of a little uncomfortable with semiconductors right now, but then again, when you think in terms of probabilities, you're like, okay, well, we're underneath the 2 standard deviation move. Stand to the right. And if you look at the daily, like we've already sunk off quite a bit. So if I was thinking that this could be, you know, an area where I'd like to start to scale for a potential bounce, sure, right? Big, huge move to the downside. We're 2 standard deviations today. Like we're talking like it's already moved 16%. You start small, like it's not that, you know, that to me is how I trade when the market conditions set up for that. So we're underneath the gamma flip line, which means what? It means that markets sell into selling, buy into buying. Volatility typically increases, right? Volatility typically increases, which today it's not really even that up. Let's look at the VIX. And then, yeah, it's kind of up. And then we'll look at VVIX. Not really anything here. So, I mean, really, that's crazy. I'd be looking to really buy if the VIX was more towards, so, yeah, no, it's in the 17, 18% here. It's really nothing, actually, surprisingly, which is, to me, is kind of bullish. So, yeah, I would feel comfortable if S&P 500 can drown out to this lower weekly implied move. I would feel pretty confident actually buying a position in the S&P 500. Not in terms of an immediate bounce, but for an execution to bring in some exposure into the market, I would feel pretty confident there. I'm gonna go back to ARM. And once again, right, so what I'm looking to do in negative gamma is to fade extreme moves. So this would be considered one of those more extreme type moves. All right. Extreme. See how it's kind of just holding there? Actually, you should pull up AVGO too. AVGO, that one's still down around the same amount, maybe a little bit more. Let's go AVGO. Yeah, this one, it's not as clean of a trend, but it is underneath the 2 standard deviation move here too. ARM is a little bit cleaner as far as the trend goes. So we're looking for some sort of a trend break. This is really kind of just holding the lows. Be cautious here. If we start breaking down, I'm looking for a tick reading that goes kind of more into the extremes, which is not happening right now. Let's keep an eye on this. And then I have an alert that would go off if we do hit an extreme. Let's get some flushes. Flush, flush, flush. Net flow is getting a little bit better, you said? Let me see. Yeah, net flow is getting a little bit better. It's still red, so, but you're right, the green line going up, that's a positive sign. We have some, a put wall, a current one at 673. And then over here, we're still a lot of focus at 67.50. So remember, a pop back to 67.50 that actually makes a lot of sense, right? So any kind of push lower, I would still think that 67.50 can be in play for the day.
Energy update out of Israel. PM Netanyahu says he has approved the country's largest ever gas deal. I'm waiting further details on that topic. And so just further details on that comment. So local press pointing out Netanyahu in a statement says, I have approved the largest gas deal in Israel's history, 112 billion shekels. Deal is with Egypt.
La da 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 da. What level books do you have access? What level books do you have access? I'm not too sure I understand the question, or if that was directed towards me. If you can reword it, let me know. Oh, it would be nice to just see a quick flush down here. It would be nice. I don't think it's going to happen. I think we're just going to doodle around and come right back to 67.50. But I ain't going to trade for that. I'm going to wait. I'm going to wait and be patient, because if it does happen, I'll be happy. Make sure that all my stuff is ready to go, if that is the case. Yes, it's ready. Ready to party. Look at these, look at the lower highs just kind of going boink, boink, boink. Just like on the edge of a cliff here. Help me, help me. Help me. Michael, help me. I'm going to go back to ARM, see if it's setting anything up here. ARM is still holding that too, this little trend. Is it worth it? A little percent up higher. I mean, I don't know. It feels like it can potentially pop right up to there. Wouldn't mind taking a little stab. Let's see here. All right. See what that does. A little small little stab in the arm. Stab in my arm. Would you be happy with 6,700? Yeah, for sure. Anything lower I'd be happy with. You know, keep in mind, so I'm looking at SPY, right? Over here. Where are we, right? We're just in this range, this channel. Okay, so we saw a massive kind of retracement to the upside. We started getting very frothy as far as my market sentiment readings go. We had a 76, reading, which is high up there. We haven't seen that for quite some time, right? So the market's resetting itself. It's taking a breath. It's pulling back in. Okay. Which is, this is so common to see, especially when we get those, like just the other video, like 2 videos ago, we talked about how back month versus front month volatility was in the 90th percentile. It was like 96th percentile. And I showed the last time it was there was December 6th. It was the same time, right? So we made the video for December 6th, right? So that was December 5th. Yeah. So right here, right? That's when we said that was the video that we talked about how it was such in a high percentile. And look at, since that point, it's come off. And if you go back a year, right here, this was December 6th. This was the last time that we saw it that high of a percentile, back month or front month. And then we kind of went sideways, and then we saw this big snap down. This happened to be on a Fed day. So this was a Fed day. I was at the NASDAQ doing the closing bell ceremony. It was mayhem. We were with some portfolio managers there. Everyone's like, holy heck, like everyone's like getting phone calls left and right by clients. They're like, oh my gosh, dude, why did this happen today of all days? It's crazy. Okay. All right, let's go back over here. See. Yeah, it's still holding up, but man, this thing just, come on, make a break. Make a break or something. Just been floating in the daily implied zone. SILJ, silver, is it silver miners? Yeah, item. Yeah, we can pull that up. Market net flow is still bleh. Bleh, bleh, bleh. Oh yeah, it was a great day for some. That's for sure. It was not a great day for a lot of people. Still got that CPI and yeah, when is the CPI report? I thought that was, yeah, it's tomorrow. Did I say this was today? For some reason, I thought I said this was today. I meant tomorrow. If I said that on last night's brief. December 18th, yeah. Core inflation data, existing home. We also have, the BOJ rate decision. We'll probably get some sort of news on the tariff outcome, right? For those that don't know what that is, right? Go back over here. We do the tariff tantrum over here, all the craziness. Then we had VOS selections, sue the administration, same with learning resources. CIT, the panel granted the summary judgment for plaintiffs, and they kind of combined it. And then they just recently, on November 5th, they did their argument. They listened to the arguments, and they're going to come to the final decision. We don't know when that is, but that can be a catalyst to bring some more market volatility as well, obviously. All right. Can you hear that? My son in the background screaming jingle bells. So Chris, so that's a thing. I don't know if that's going to be the case or not. I would imagine that'd be a bullish case. But the thing is, when they actually granted the summary for plaintiffs, right? So the judgment, the market already started potentially pricing in what the outcome was going to be. So if they shut it down, it could be bullish. And maybe the market already priced that in. So the market now knows that they're going to do that. And a lot of this, from Besant and a couple other pundits, they're saying basically that's going to be the case. They're going to shut it down. But then they have other ways of doing it, apparently. So I don't know. I really don't. I guess we'll wait to see what market flow does. All right, here comes the S&P 500 in a little bit more. Let's see here if we can create some sort of opportunities. Finally get, man, it looks like we're coming for that lower weekly implied move. Maybe even today. Ooh. Yes, yes. Come to me. All right, so we're getting, dang, gosh, it's like not even close to being extended. We need some capitulatory moves to happen, people. Come on.
I'm just keeping an eye on US equities. It has been a gradual move lower in today's session, and once again, just new lows across equity futures. We're now down around 1% on ES, 1.6% in the red
Chris.
on Nasdaq 100 futures. Having a look at sectors, tech continues to underperform.
That's okay. That's what most pundits do on
with
news
a
anyway.
couple
They just kind of
concerning
just talk.
headlines surrounding Oracle in terms of industrials and communications.
Is that fishy friend?
Over 1% of losses. Meanwhile, energy staples outperform, particularly energy, as crude prices currently up around 90 cents per barrel.
Come on. Let's go. Let's go. Let's go. There was that break lower, which, you know, felt like that was going to be the case. And we're right there at that weekly implied move. We're so close. Probably going to snap right back to that. Those little area. Come on now, people. Yeah, it is pretty orderly today. Pretty darn orderly. It is outside of the market's expectations for the day, but it's still well within the week. Right. So once again, I'm interested in actually just putting on a SPY position at the lower weekly implied move. I'm totally fine with that. I need some exposure. And that'd be one way to do it. And I like that idea too, because then I just have like, you know, if for example, I'm not going to do a 50% position, but let's say if I did a 50% position and the SPY goes up 1%, that means my portfolio moves up 0.5%. Right? If it goes down 10%, my portfolio falls 5%. Very manageable stuff. Right? So I would like to execute a little bit lower. We'll see if that can happen. I would say I'm close enough to taste it. I feel like it's right there. I feel like in a $6,700 product, we're 10 points away. So I feel like this is me just being very like picky. Because ultimately, if I'm taking just a 20% position in the SPY, we'll call it, like 10 points don't matter on the SPX. It doesn't matter. Because I'm not looking to just trade it really quickly. It'd be just to hold it, see what happens, have some exposure, chill out. This year's been so good. You've been checking Lennar still? We'll take a look. All right, we'll look at Lennar. Lennar had earnings call. Yeah, I don't really mess too much with the earnings stuff. But yeah, it was earnings today on a breakdown. So yeah, maybe you get a reversal. It's kind of like trying to shape up over here, but I don't really mess too much with the day of earnings unless if it's just way outside of expectations, which I don't think that this one would be considered way out of expectations. But then again, I didn't look at the expected move. All right, Broadcom came back up to its 2 standard deviation move and got rejected. Hallelujah. Awesome. And we're kind of still sinking off here in the NQ. Can you take me lower? Hey, BM, I appreciate that. Yeah, as tips kind of come through, I'll give you some of those tips. There's all kinds of cool things you can do with Thinkorswim. Some necessary, some not so necessary. Well, to me at least. All kinds of cool stuff. Man, it would be nice to just see this thing flush out. It's really not. Broadcom hitting new lows just now for the trading session. This is down almost 6%. This thing is getting just hammered. Some big sell side here on these last few sessions. That was earnings, so. Let's go back to ARM, see what that looks like. ARM is just floating around, not doing anything. I took a little position, and I might just hold that position. It was like a swing trade style position. Usually day trading, I can go a little bit more size, but I didn't. So I took a little stab here at an arm. It is flat. Flat position. Would prefer to see this thing, honestly would prefer this thing to kind of crack lower, then come back in and break. Something like that. You know. If you close at the lows a day, you typically get follow through. So when knowing that when you know that, and when you typically close at the lows, you get follow through, like right here, right? You got to be aware of that. You can get continuation to the downside. So your positioning, like you can't worry if you have another 5% down day. So your positioning has to make sense for that, for something like this. So when these market conditions change, right, when we're below that gamma flip line, that's what I do. I look for big moves to the downside, and I look to fade those moves, but you got to do it with smaller positioning, because when you're under the flip line, volatility typically increases, right? The beta of these products go up, so your adjustment in sizing has to change and adjust to that. Do I have a daily P&L? Yeah. Today, my swing trading portfolio is flat on the trading session, and my futures trading is up 10,150. So, minus 3,000 from that. Minus 3,000 from that, because that one is a eval. So never mind. About 8,000. That I can withdraw. Oh, your stream started from behind. I was wondering, Ivy Lee, because I don't know if it was your comment or somebody else's comment. I was like, I don't know if that makes sense right now. Okay, here we go. Let's see here. Let's go to tick chart. See if I can produce another extreme. Okay, man, it ain't coming in at all. Just rotations. I want to see. Explosions. Explosions. All right, we're near that weekly implied move. Almost down 1% here on the S&P 500. And we have CPI tomorrow. Oh man, what can happen? What's gonna happen? And then we have OPEX. Oh my goodness. Oh. Is there a link to follow trades? No, I don't do an alert service. Yeah, I don't have an alert service. It's not my style. I have a service. It's only $16 a month and gives you a lot of tools, resources, and a lot of my research, like the weekly expected moves, my Asher bot. People in the comments could talk about it. Whoever, I'm sure that there's people in here that are in the Discord, but I'm going to probably have to raise those prices again, because I'm running an update that's going to cost me another arm and a leg. So it's currently $16. It was $9 a month for the longest period, and people got grandfathered into that. Had to bump it up to $16 a month to make sense for the new developments and the cost to run these developments. And now that I'm running more updates, I'm probably going to have to raise the prices again for it to even make any sense. It is expensive to run, and the amount of data stuff that I go through, it's crazy. Enterprise level APIs, crazy. And then the cloud service, right? You need, there's everything. You got to pay for everything. It's crazy. It's so fun. People don't understand. It's like, dude, if you're paying $9 a month for what's in this channel or what's in the Discord, people I think some people understand it, but I even $16 a month, like, I don't think people really get what they're getting. because there's just a lot of tools in there and research, including my tight list, my watch list, all that stuff. It should be north of, I mean, just for the tool alone, just the Asher alerts, and then the be able to pull up the expected moves like that quickly for daily, weekly, monthly, that alone is easily in the 30s to 40s as a tool. But then you also get Tradeify query, which I have to pay for annually or monthly. I pay for it annually, which is all of their stuff, which typically costs a user $70 a month just for that. It's crazy. But yeah, this should, I mean, the cost of this service would, just for some of this stuff, I mean, it would still be a really good value at like $50, $60 a month. Like at that point, it'd still be a very good value. But it's not, it's $16. So awesome. Which I like because it keeps people around, right? The higher price points, if people try to make money too fast and do stupid things, then they leave. Right? Then there's, higher turn rate. So if it's a lower price, people stay around, they're in the community. They don't need to worry about $16 or $9 or whatever it is. Or it's even less if you buy it annually. All right, come on now. Almost there. Just keep going. We're not getting any sort of capitulatory move. It's just like a slow bleed. Almost at the lower weekly implied move. Can the market overshoot the lower weekly? Yeah, absolutely. Absolutely can. In fact, it's pretty crazy if we start breaking from lower weekly implied moves, say, 15, 20 points away, you can have a heavy degree of hedging activity take place. So if you go into like the minute time frame, like on ES, for example, and all of a sudden you start to see 8,000, 7,000 contracts a minute, that's dynamic hedging just kicking into full extent and potentially breaking from those lower weekly implied moves. And then you can just go, it could get crazy. Right? You could have some serious crazy moves. So yeah, be careful, 10, 20 points outside, it doesn't necessarily mean you have to come back in, right? You can have substantial breaks. So it's all about probabilities and understanding kind of how hedging activity takes place. Now keep in mind too, this weekly implied move that we're coming down to, we are already in negative gamma, right? Is ARM getting oversold right now? I have to look at my position. Yeah, I'm down like $40, $50. So I'm not really worried about it right now. I'm going to let it do its thing. Especially if it holds down that trend. Perhaps maybe I'll try to stab into it again if S&P 500 could get down to that 67.25 level. It looks like it's going for it. I mean, come on. It's right here. There's not much beyond that. So anything under 67.25, I think we play it back up and potentially even up to the 50 handle up here. That's a possibility. So let's look at it. I'll pull it up here. So there you go, 67.50. This is kind of where the put wall is, but we're below it. And price is slipping off, so I would like to see it down here. And at that point, I would probably even take just a stab at MNQ again and just hold on to it for the remainder of the day, as long as I don't get some sort of substantial break, right? But taking a stab on a move underneath the lower weekly implied move after a day like today already, I wouldn't mind just a buy and hold sort of a position just to see if I can, capture some bounce or something like that. Let's go back over to SPY. Oh man, yeah, it's still kind of just dragging along. The blue lines on my chart over here are these are volume weighted average prices. So this right here is anchored to the day, and then right here is anchored to when this real sell side activity took place. Because when we broke down here and we started to see actual sell side, I had a feeling that this was going to matter, this volume weighted average price, and you could see here it did matter, right? It mattered here and then it mattered here. So if you reverse back to when price was down here, we talked about how, we want to see it come up to these levels and consolidate, put in a higher low. It didn't do that. Kept on going lower. But from this level, if you watch that area on the stream, you'll hear us say, oh, we're getting an extreme tick reading. This is where it could potentially bounce. That was right here. So 946 right here. We saw a bounce. I traded that. Not a big one. I just took like 20 points out. And now I'm hoping to see we do that again into or underneath the lower weekly implied move. But right now it's just this like slow drain. And typically with slow drains like this, you get a snapback. People are like, oh, it's coming back. And then it comes back in. And it's just this kind of like this. Boom, 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 boom. Like this. Boom, 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 boom. Not a fan. Not a fan. So in trading view, it's right here, actually. You don't need it. It's not an indicator. You hit this little projection thing and you go into volume based and it's right here on your screen. Bam, anchor VWAP. So you go ahead and click that and then you would just go ahead and click that and you would just say, oh, I want to anchor it to right here. Right? So when we reject it from there, we kind of hand off and now this one's acting as resistance. So when I look at this, I'm like, okay, if this comes down, if it comes back up, it might hold as resistance, but if it breaks above that, that might open the floodgates to back up into this VWAP. Pretty cool, right? Tesla down about 4.5%. Tesla's getting smoked here too. That's definitely dragging the market now.
Just making you aware of a treasury buyback that will be released in around 3 minutes time. So in terms of security type, that is nominal coupons, 3 to 5 year. Maximum purchase amount is 4 billion.
They have a treasury buyback, getting information on that. Tesla's coming into its inclining 5-day moving average. So here's a pullback in Tesla that you can maybe look for strength after. This is pretty tight here too. Man, this is getting really tight, this thing. Look at this. Look at the minutes on here. This thing is coiling up like it's going to break here and make a big expansionary candle here. See if it breaks to the upside or downside. I'm not going to trade it. I would prefer it to break down to the downside now at this point because that can help drag this market to where I want it to be. Thoughts on Rocket Lab? I can pull up Rocket Lab. I got to do that in a second here because I'm looking to see if this thing could break. I want to trade. But Mike, why aren't you going short? I don't know. I just don't like shorting. It's just not my thing. The times that I short, it's like just big fades, and I just... The cool thing about shorting is you make your money fast. When you're in a trade, and if it's right, it typically goes faster than a long position. But it's just not for me. Oh, gosh, I knew it was going to snap right from there. You little punk. Stinker. You stinky. It would be just for new people pick. It wouldn't be, yeah, you can, if you're in the $16 plan or the $9 plan, I let everyone grandfather in. But the thing is, if you grandfather in, you can't cancel. As soon as you cancel, I can't bring back the plans. They're gone. I can't bring back the pricing. So you like for example, with everybody, like a few months ago when I was like, all right, if you are in this and you want to buy the year, switch to annual, get the grandfathered pricing and put it, keep it on auto pay. If you have to change your card, you can do that. It's not a big deal. Just don't cancel and you'll have it at that price for as long as you want. Right. So yeah, the moment you cancel it though, you lose access to that pricing. So the best way to do it is to do annually, right? Get the discount, an annual discount. It's like, if right now it's like $160 or something like that. You get it for an entire year and then it's just $160 a year. Right? And then that's like a one-time thing. And if you don't want it, you just cancel it and don't worry about it. And if you want to get it again, you can do it again. I don't really run promotions or anything like that. I haven't, because the pricing is too low to do any sort of promotion. I think that there is like something that Patreon does automatically to like send, like to try to encourage people to try it out if they're a free member. But even then it's like, it's not an annual discount or anything like that. It's like a month to, a discounted month or something like that to check it out or something like that. But I don't personally do that. I think it's just kind of built into their software or whatever. I don't know. Hey, thanks, Dan. Yeah, there's a lot in the Discord. Right? It just depends on what you do. I've been considering actually creating a separate channel and a separate tier. You guys let me know how this is, but for actually just for hopping in here for like proper prop trading or futures trading. So I've been giving that some thought, where I would basically be just live throughout the week. I can't do that for $16 a month though. I can't make that kind of commitment for $16, but it is something that I've been considering. I have a baby on the way, so I got to figure that out first. Yeah, no promos, ethos. Like I said, I haven't done any promotions or anything like that. But sometimes like Patreon does like this auto-generated something.
Update for autos from Cox Automotive notes December seasonally adjusted annual rate of new vehicle sales expected to finish near 15.9 million.
It's not like the annual discount. Like, so I guess there is a promo. If you buy annually, you get like a 16% discount automatically. That was me, but not like I don't have like at least right now any sort of like Cyber Monday or Black Friday deals or or whatever. I haven't done that. Okay. We're just kind of doodling around here. There's Tesla's kind of that bigger candle, right? We were talking about how it was getting tight and it did break, but didn't really pull anything down with it, which, not what I wanted. Yeah, 69, like a live trading channel. Baby's due here like in a couple weeks. No. Yeah, baby's due in a couple weeks. Thanks, Swim School. Yeah, I'll give it some thought. I feel like as a group, I got to look into like the exact things on that about, it's not necessarily copy trading, but I know some firms discourage doing that. So I'd have to ask them to say, hey, if I have this, can people and I'm live, can people follow it without being like the rules breaking or whatever? And I'm sure it'd be fine, but I have to reach out to the firms and, qualify and make sure that that's the thing. And obviously anybody could trade their own firm, but I don't want to be, punished because I have a channel that people can watch me trade. Because the thing is, like, that will make me more money. Trading will make me more money than the service will. At least that's been the case since I started the service.
And so they do accept 3.7 billion, the total amount offered, which was 11.94 billion. And they did accept 16 issues out of 48 eligible issues.
So bulk of everything that I make now is just from trading, right? It's nice to have the Patreon, which is definitely supportive of giving me a steady income for some of the tools and the stuff that I use, and then also just random bills that help me transition from my full-time corporate career and leave that because I was doing great there. I was making a lot of money. I was there for 13 years. Great money, great everything. I had a really good time there. The Discord doesn't make as much as I made over there. So I'm definitely taking a hit there, which sucks because, they covered benefits. They did matching in my 401ks. They did all of that stuff, all the benefits with that, with the entire family. So yeah, I'm definitely not making as much via the transition in just the Discord, but my trading definitely makes up for that. But the thing is, trading can be volatile, right? I can have a great month and then, be awesome. So I always try to take my money out and save my money and do stuff like that. But you can have a drawdown and you got to be okay with that. You can't try to go crazy and make it back really quick, because if you have a drawdown month or drawdown week or whatever, and if you spiral out of control, like, it's not good, especially when you rely heavily on this type of stuff. From my experience, most traders typically fail because they're undercapitalized. They're undercapitalized and they take too much risk. So, little secret to trading is small wins are typically your way to the fastest amount of profits versus big wins. If you chase the big wins, you run into a little bit more problems, or you tend to. create bigger problems when they arrive. I worked in the communications industry, or a Fortune 20 company, for a while. Started from the bottom, worked up to a position that I loved. A lot of travel, a lot of cool stuff around marketing and, you know, creating cool things with the teams. I will say that some of the corporate phone calls are hilarious. Like some of those, you know, if you're in the corporate life and you get those conference calls, like Q1, blah, 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 blah. It's like, okay. And then you get off the conference call. You're like, why did we have this call? It's like a checkup call. And sometimes I had to run those, right? So I'm like running them. Like I remember having a call with like a national retailer and there was like 3,000 people on the call. It wasn't a small store and I had to run off stuff. I'm like, dude, there's not a chance in heck that these people are listening to this call. Like like I know where they're at, right? Because I know where they're based off at this national chain and I know their level, right? So I'm like, dude, I'm running off these like certain metrics and, you know, focus points and stuff like that. And I'm like this is pointless. This is so pointless. It makes no sense. Hilarious. I used to get so nervous for those calls too. Like nerve-wracking nervous. Like I wouldn't sleep at night. The calls are god. Oh yeah. The calls are pretty bad. Yeah, so in the Asher Query channel, I have a little bit of a video there. So if you go to the Asher Query channel, in the pinned comment, there's a video there. And it says, here's a quick video explainer on various commands for AsherBot. I'll probably make a new video with all, like, that goes over everything. I plan on doing that. I've just been busy, you know? Just been busy, dude. You know, like a little busy. Looks like ARM or Avago, AVGO, is bouncing back here a little bit above its 2 standard deviation move. All right, so that's like not horrible. We'll see if that just gets faded, but NQ hasn't even budged, so I'm guessing, yeah, Tesla's holding it down. We got Google, that's it right there. Google's kind of holding us down, so we need Google to break this little trend back up, and then we can maybe see a little bit of a pop. Still no tag of the lower weekly implied move, which is, you know, sucks. Yes, it do. So break down. Chris, that's funny. Yeah, I feel ya. Stabler into MU earnings. Maybe. We'll see. Let's see. So MU. What are we pricing in here? $20 expected move. Yeah, maybe. I might stay for that. I do see the tick, subtle tick divergences taking place. But the thing is, like, I prefer to be on a bigger break, you know? So yeah, I see what you're saying. Like, actually, I'll pull it up a little bit better way. I'll pull it up like this. I'll do ES. And then I'll go ahead and do, oh, come on. I thought I had this up. Comparison, we'll go bar chart, we'll go tick. Nope, not tick arc, I want just tick. I like it white. All right, there we go. Okay, so here's the tick chart down here. Obviously, it looks different, right? I'm still looking at the minus 1,000 plus 1,000 readings. But as you can see, we're kind of putting in these lower readings over here. I mean, this one that was actually the low right there. So we'll call it, spade is spade. Technically not there yet, but you can see from that point, we saw a little bit higher reading on the tick. So when this is the case, you might see bounces back up into and around kind of like a more of a tradable value-ish, area where we saw more price action took place, which would be kind of right here at about 67.95 on ES, right? So you play this move, comes back up into here, it makes sense. You have a stop down here. Now, personally, I would like to see it, actually have a closing low, but still, nonetheless, right? A little bit of a divergence there that's building. Make some coffee. Nice. Sanjita, Tota. I would just buy SPY. I would just be buying SPY in my United States Investing Championship account. That's all. If we can get down there, I'd just be buying SPY. Like I said, I don't have much exposure in the markets, and I'm not going to be buying like 100% position, but I would just be buying SPY down there just to have exposure. Quite literally, that's all I would be doing it for is exposure. Wouldn't care if it goes down, because if it goes down even a lot, it's not going to wreck my portfolio. But if it does go up, at least I get some bit of that, right? And then I get to capture it up to the upside. Maybe maybe if the S&P 500 goes up to 7,000 by the end of the year or into New Year's, having that SPY position will at least bring my portfolio from where it's like 47% year to date, maybe up to like 50%, or maybe not that much. Maybe in around 48, 49, because a smaller position wouldn't quite do that, but we'll see. That's what I would be looking at. But man, this thing looks like it's just kind of holding on for dear life. Just like it was over here, but now it's doing it again over here. It's fun times, man. Yeah, and unfortunately, I'm not good at trading this chop, so I got to wait for those like hits. Like I got to see the move. Right? I don't mind fading an extreme move, but this stuff, it's like, okay, if I go short right now with the anticipation of breaking down, like that makes sense, but also it might do this ahead of time. It might pop up through here, and then I don't want to hold on to it for that. And then it might come back around, and I'm like, I'm not going to short it now, and then it's going to break down. Like I hate that. So I prefer just like fading the bigger move. Or, following flow. And flow right now, that doesn't look good. Actually, in fact, this actually kind of makes me think that it will break down. This green line going down like this. I'm not a big fan of that.
Rheinmetall, so they do
once again,
350 million euro non-cash impairment for discontinued operations.
What's up, Barkster?
They forecast 30 to 35% sales growth for 2025.
Hey, thanks, Barkster. Appreciate that.
And the executive board of the company has been in talks with potential
Merry
interested parties
Christmas.
since April 2025.
Happy holidays. Happy New Year.
Management board decided in December 2025 to negotiate sale with 2 bidders and is aiming to sign a contract in Q1 of next year.
Supposedly Trump to declare war with Venezuela tonight. I would imagine oil is going to move. If that's the case. Oh, gosh, man. I guess there's all types of catalysts building in this market. I don't know. I don't know what's going to happen. So all I can do when I'm very unsure is focus on what I can control, because I can't control narratives. I can't control where price is going to go. I can focus on what I'm buying, when I'm buying, and how much of it, and when I'm selling the dang thing. So position sizing at its finest. Yesterday's video, we went into like some bigger term charts too that like look ominous, right? But one of the things that I explained was it doesn't mean that we can't go higher, and I still want to be a part of it, right? You make the most amount of money in bubbles, right? When things go parabolic to the upside, and they keep going, and keep going. And even if you know that it's a bubble, like you kind of still got to participate. That's just the market condition that you're given. And then like if you don't participate and then finally, goes, and then it blows up and you're like, woohoo, I told you. It's like, yeah, but wouldn't you have rather played it to the upside and then managed your risk when it popped? I'll tell you one thing, so here's that kind of the divergence that was called out by, who called that out? in the chat? Somebody called that out, the tick divergence. So just good keeping an eye on that.
On Venezuela and the
nice
US,
little pop right there, right?
Venezuelan Navy escort vessels after blockade threat, according to New York Times. That's the Venezuelan Navy escorts vessels after blockade threat, New York Times reports.
Yeah, we're hearing some of that stuff right now. About Venezuela, as the moment you just mentioned it. Yeah, LMT did hit a 2 standard deviation move earlier. Yep, good eyes, and then it bounced from there. I was actually about to trade this one. I saw that alert earlier. You can see I marked it. I didn't trade it though. Dang it. More is bullish. I mean, if you go back through history and you look at the charts, a lot of the times, well, I mean, leading up to it, not all the time. And then, I don't know, not all the time, right? Like Russia, Ukraine, we went through a bear market. But I do know what you're saying, because some of the times when it's like announced or officially, all of a sudden things like play out better. It's kind of weird, right? The market's kind of discounting it. So, but once again, it's like, okay, but price action has to prove itself still at that point. I can't just go in because it's happened before. Come on. I was really hoping to see just a flush down here. Thoughts on ZAR, XAR. It's a little too liquid for me here. Looks like that. Let me see over here. Oh, okay. ETF, a spider ETF. So definitely not day trading, but aerospace defense looks pretty strong. All right, we're taking a little bit of a pullback here, seeing potentially a higher low. So maybe through this 240 area, it looks a little bit better. So now it kind of has to prove itself. It's very skippy, so I'm not much of a fan of how it's all over the place, but I guess, if it's a swing trade, that's okay. Being a spider ETF, the bid-ask spread is not horrible. Maybe look into the holdings of it. Go to the Analyze tab and look at the holdings. You can look at what it's holding. It's saying like ATI, CRS, WWD, Rocket Lab, KTOS, right? Maybe look at some of those. Another way. All right. Yeah, that green line going down, the red line going up is not the greatest for the market there. 674 above us. So if we start busting to the upside, keep an eye now on this 674. Could be a level of contention.
And just further update from New York Times does note that the Washington was aware of the escorts and Mole's course of action.
Okay. And NQ is just like flat on its face here. Flat on face. I don't really have a thought on Micron earnings other than just what's expected in the market for risk. And right now it's pricing in about a $20 expected move, plus or minus. All right, so if you go over to here to MU, it's already kind of fallen pretty hard. And now it's saying like pretty crazy, actually, $20 of expectation. So you can go from here, go down $20. We can be trading right here. Or if we come down, I'll just activate this up. So this is one standard deviation of risk being priced in from the market, okay? So I don't know where MU is going to close, and that's what matters the most. Like for all we know, it's going to bounce up, so then I got to readjust this. But for where we are right now, it's saying $20 expected move. That would look like a move up to 240, down to and around 200. That would be that one standard deviation of risk, right? One standard deviation of risk. Have only been able to execute one trade really on live so far. Well, one futures trade. I did do the ARM position, but that's quite literally hasn't done a single thing. So, and that's a small position, like miniature. Micron earnings. Meanwhile, some consumer staples are flying. Kroger just hit a 2 standard deviation move, but to the upside. Woohoo! Kroger. What's Costco up to? Costco finding a little bit of a bounce from its monthly expected move. Nice, dude. After being sold off on, so go figure. Sells off and it bounces. Surprise. Well, Walmart. Walmart's been holding up really well. Nice. That's crazy. Target. What's Target been doing? Kind of building a base near its year-to-date VWAP. Interesting to see Costco get hit and Walmart go up. Wonder if that's a sign of anything. Costco breaks down, Walmart takes off. Let's look at McDonald's. I still got a position in McDonald's. This also doesn't look too bad either. It's overall range bound, but we're trying to break out. So we'll see if that's going to be the case. IWM. I did do an IWM thing yesterday, and I trimmed some early this morning. Do I have any more left? Let me check. No, I don't have any left. I don't have IWM left. Okay. Yeah, it's the same situation here with IWM. This is kind of where I was thinking that it could pull down to. So I think I did a VWAP from this low here on 1120. So let's go ahead and apply this to 1120. And this is kind of where I was thinking we can see it come down to. We're not quite there yet, but it's above a rising 20, rising 50, and it's kind of coming into confluence here. So overall, we saw a nice big move up, and now we're seeing it pull back into kind of that level of interest. The weekly implied move for IWM was 247.9. So it's right now just underneath the weekly implied move. 247.9 is right up here. 47.9. Right here. Extend to the left, extend to the right. Edit properties. Dang, I'm happy I got out of it this morning. There was really no reason why I got out of it other than it was just a nice quick reaction that I bought. And I was still waiting to see if it can come lower. And my level didn't get hit yet, which would be this VWAP, but it's underneath the weekly implied move and right in around these areas, right? We get a nice move up and we're pulling back. So nothing substantially is broken really yet. So yeah, I'm okay with something like this, but I wouldn't go heavy right here. The problem here is you got CPI right around the corner and you have OpEx. So it's like, it's unfortunate because it's like you take the risk now, but then you risk it just, something significant happening. But if you don't take the risk and it's something good happens, it could just take off on you and you miss it. Unfortunately, that's just the case. So the way that I combat that, when you feel that kind of like, that can be the potential of happening, which in this case it could be. You do a pilot position, you do small positions. So you kind of just feed it by just like, hey, I'll take a little bit here. Because then if it goes up, you're like, okay, I caught it. I caught some of it, right? And then you can always look to potentially add. And if it breaks down, you're like, well, I only got a little bit, right? So that's how you kind of curb that internal conflict. You're welcome. Uh-oh. Uh-oh. Yeah. IWM does look like it can get down there. It definitely does. I mean, we're right there, But then again, I mean, look at this day, right? This day closed right here and it's like, definitely look like it can follow through to the downside. And that was the bottom of this move. Same with here. Like this looked like it can get down to the 50-day moving average. It didn't. It just went right up and then got there, obviously, but much later. IWM is a difficult one. It's like kind of all over the place. It can throw you. Yeah, that was Coco. So overall, I still think that we can go to 67.50 today. I would have preferred to, oh, wow, look at that little subtle shift. 67.25 changed. So now there's a lot of focus down there at 67.25, so 10 points lower. Now I'm very interested in an undercut of the weekly low. It was the focus at 67.50, so that changed. So never mind. Never mind. Never mind. Market net flow. Gosh, man. You know what this looks like?
Perhaps of a note for some of the
Because we haven't broke down yet. It kind of feels that look and feel like it's going to happen like towards the end of the day,
the future of flight is upon
where we're
us.
just going to like sell off. It's
Let's
going to freak
tune
people
in
out right into the lower
at
weekly
2:30
implied
p.m.
move.
Eastern time to hear how the department is unveiling the nation's first advanced mobility strategy.
Annoying. Coco, can you stop, please? Let's go over to the tick chart. Nice, we're getting a little bit of movement here. I'm going to remove this one from my screen. Keep an eye. Bud. Yeah, we can look at Bud. Shush. Semiconductors hit a 2 standard deviation move today, so the ETF itself hit a 2 standard deviation move. At 338.48 just now. So that was a daily 2 standard deviation move. That's what's really dragging these markets is the semis. You want the semis to lead the charge. Well, I guess it's leading the charge to the downside today. But there you go. There's a 2 standard deviation move. And it's a pretty sharp decline here too. So once again, I like it when it breaks lower and then you play it back up through. But, you know, seeing all these various semiconductors already hit 2 standard deviation moves, maybe perhaps if we do start bouncing from here, this is where those ones go up. Like, for example, like ARM, right, was one of them. Right, we broke down underneath it and we started to break back above. But then AVGO wasn't as clean of a setup, but that's, no, that, I guess that did break back up to its 2 standard deviation move. Okay. So if semiconductors now starts to level out, say this ETF, and we start breaking back above, you know, maybe that offers a little relief for these things, which would overall be good for the market. But once again, I want to see this thing flush down. And I want to see an extreme tick reading too. That's what I want. And what I want, I rarely ever get. But you never know. Sometimes I do get it. Sometimes I do get what I want. Yeah, Micron, I mean, there's not much to review on Micron other than that it has earnings after the bell and they're pricing in about $20 of expected move. So 1 standard deviation of risk would bring us up to and around, you know, 240-ish. Down here to and around 200-ish. That's 1 standard deviation. Think I'll get it? That'd be nice. That'd be nice. 674. So any bounce up to 674, I'd be a little bit, once again, I'd just be kind of careful up at the 674 marker. Can act as a potential resistance there.
Just an update here from Hungary's MOL. Says it expects production loss of around 30% on average at the Danube refinery due to recent fire incident.
Nice. What is GNRC? Is that's not Genrac, is it? GNRC. Oh, it is Genrac. That was a big move too today. 2 standard deviation move on Genrac. Not a great looking chart, but yeah.
Further from MOL says will intensify transfer products from its Bratislava refinery and will increase third-party imports from the region.
Quite the pullback in semis, that's for sure. Who's willing to buy that dip? Dun, dun, dun. I mean, go over to something like SOXL. You just get like a little bit of a pop. I mean, that's like 2-3%. You know, think rubber bands, right? You get strong moves to the downside, you get little pop backs. Ow.
Now seeing settlement for WTI
Although,
settles higher by
again,
67
you
cents
get
at $55.94.
wonderful amounts of data come in still. So wonderful. Yeah, you're right, Tom. Yeah, for sure. We'll pull up. We'll just use VIX. I like to look at a VIX future, but VIX is fine. Yeah, it's pretty. I mean, fairly calm. Nothing too crazy here. It's only at 17. So we're seeing a little bit of a move from a really low reading, right? 14%, 15%. The only thing that could set it off here, I mean, is we are still in negative gamma, so we got to be aware of that. But it is surprising seeing this type of a move today, and it way fairly not really reacting too much. And you know, once again, we got OPEX, we got option expirations, we got all kinds of things going on here. That's looking like it's almost like, you know, what's the saying? Hedge pod don't like. What about a hedge pod? Whatever that saying is. Something about boiling. Well, it just seems like the market doesn't care about what's going on right now, which could turn into something very big, or it could be an indication that the market is anticipating the move to just come right back. Maybe not today, but maybe next week. Yeah, today is not a. I mean, today's great for anybody that wanted to short it. Right, because everything's kind of just cracking lower. But that's why we're being really patient here and looking for extreme readings and stuff like that, because if you're trying to fight this and buy the dip, you're getting stuck. You got stuck, right? You might, you know, eventually get bailed out, but like the tick reading right now just came up to, you know, near its high of the day, and it's been rejecting from these levels. So NQ didn't even budge. I don't know. It just has a look and feel like it can slam lower still. Go to market net flow. Green line's heading down. 671 is a potential magnet level here. You got 673 now and 674 overhead. It has the look and feel like it's going to break down. I'm not going to short it, but that's the look and feel of it right now. So if it breaks down, I want the lower weekly. Just give it to me already. And don't do it into the close, okay? Don't do it into the last 5 seconds of the day, which I know that's going to be the case. That's always the case. All right, I want it now. I want it now. Back month versus front month volatility relationship. What does TIA stand for? I forget. TIA. I'm stupid. Ladies and gentlemen, this is the moment you've been waiting for. Bum, 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 bum. Oh, thanks in advance. Thanks. Yeah, that's it. Okay. Got it. Oh, thanks, guys. Thank you in advance. I have to pull up the chart so I can kind of walk it through. Let me see if I can do it. Stunk. Chart. My dashboard. Oh, where are you? Oh, where are you? I found it. still want to keep a close eye on this one. Okay, so this is back month, first front month volatility. When you get up to here, like, okay, so, well, you know, this yellow line is back month, first front month volatility, which basically means you're measuring the CBOE 3-month volatility dividing into the VIX, right? And it gives us this yellow line, goes up and down and up and down and all around. Okay. The easy way to read this is looking at like, hey, extreme reading. So that, you know, the difference between the two. And when you have back month, first front month volatility up above 1.20, which means that back month is 20% higher than the front month, that's typically been more of an extreme reading, like telling you, saying, hey, this is typically where the market consolidates, pulls back, whatever. So in the video the other day, we got a reading way up here at 1.27 or something. And that, we haven't seen this type of reading since December of last year. And so we walked through what that looks like. And then what you do here, what I do is I percentile rank it, because markets change over time, right? So I'm looking back 3 years and I'm percentile ranking it. And that was in the top 90 percentile. It was like the 96th percentile. So it means it's pretty frothy, right? Pretty frothy reading, which means that the market can typically pull back and consolidate, which just, you know, which is happening right now as we speak. Let me keep an eye here because the market looks like it's trying to break lower. And then, you know, what are we doing, right? We're coming off today and this is coming down a little bit, not by extent, but now it's not that frothy. So that means my sentiment index, sentiment indicator, right? I got to look at all the other components, but it typically is going to back off a little bit more to neutral state after being more extreme. When you start breaking underneath 1.0, that has been a good time for the exact opposite, right? The market's selling off. And then that is kind of where you would start to look for the market to potentially bounce and or consolidate. Sometimes you get flash moves way significantly lower, like down here, down here, down here. But typically when you're in and around these areas, this is where you start to look for the market to try to find itself, the sell side fear to kind of just cool off a bit. So there you go. All right, let's take a look back over at SPY, still going sideways, looking like it's going to break down. We got our NQ, kind of broke down, feeling and looking like it can still break down. Looking for SPY, SPX, to come into this lower weekly implied move. That would be the put wall. I would love to see a snap underneath it with like an extreme tick reading. Because if it does that, then I'm like, oh, we're playing right back up to 67.25, potentially even higher. That would be my favorite type of setup right now for a fade. We haven't really had an extreme reading other than once, and I did trade that for a measly 10 points. I'll take it. I'll take it. I'll take it. Semis just closed a big gap today. It's a weekly expected move. Yeah. So semiconductors right now is trading at its 2 standard deviation move. So, you know, if you were thinking about trying to buy semiconductors because you think it's going higher, you know, it's better to buy it here than it was to buy it up here. I mean, obviously in hindsight, but even if it was over here, I'm pretty sure I was talking about it back then. Like, yeah, you don't really necessarily, it's bullish that you just hit a new high, right? That's bullish. But I wouldn't buy it right here after a move like this. So if you're looking for a pullback and you want to start to execute, yeah, you can maybe do a pilot position. But remember, it's getting weak, so you can get continued downside. So you start small. And then if it starts to shape up and start to actually move higher and starts to actually give you a better setup, you can potentially then look to add. Right? That's how you kind of tactically approach it. But if you close at the lows, just like we closed at the lows here, like, yeah, it marked a bottom almost, but remember, it still sunk off and it had some follow through. Here, it didn't. Right? Here, it closed at the lows and then had some follow through and then bounced way back up. So it can be quite erratic. And you have Micron earnings, obviously, after the bell. I don't remember here. Let me go to Analyze tab. It doesn't show me the holdings, but Micron's in this. I don't know how much weighting it has. I know NVIDIA has a large weight. It's probably the largest weight. And Broadcom as well. But also, you look at these semiconductors, they've been breaking down, right? The last time we talked about AMD, it looked like it was a bear flag, and look at it, followed through to the downside. I said, you know, it looks like it would break down here, but yeah, once again, I was like, I'm not going to short it, but it would have made sense, right? For people that do short. Broadcom down about 4-5% already today, and this is after some strong moves. So once again, you know, I'll pull that back up. Trying to find its little grip here, actually. right around that 2 standard deviation move. Help me. Let me go back up to the daily VWAP. Yeah, back month for front month hasn't come off much, but at least it came down this time. Yesterday, right, it didn't even come off. It was like still pretty elevated.
Update from the Politico. US and Russia to hold talks on Ukraine war in Miami this weekend.
Oh my
That's the
goodness.
Politico reporting US and Russia to
Geopolitical
hold
risk.
talks
You got
on
all kinds of
Ukraine war
risks
in
going.
Miami this weekend.
Man, all kinds of stuff going on. Which, by the way, creates opportunities. It really does. It does create opportunities. Because sometimes if like this is all just panic selling, like imagine catching and you just buy a little bit and it comes right back up to these highs. Like some people are just panicking out, getting out. But we're looking for these like extreme readings instead of trying to like go too fast, too heavy, too quick. Right. I probably actually wouldn't even mind adding semiconductors right now at this point to my portfolio, just to have some semiconductor exposure again. Right? That wouldn't bother me at all. Actually, in fact, I'd probably just look at SOXL and then I would just do a smaller position because it's 3x, which means I would have more capital to deploy anyway. It's not a bad idea. Right? So I'd have to be okay with it coming off more, losing 14% on it, something like that, $5 a share. So I just have to adjust. I don't want to lose 14% of my portfolio, and I don't even want to lose 2% of my portfolio on this, a name like this, or even 1% of my portfolio. I don't mind losing 25 basis points though, or 50 basis points by doing a fade trade in my overall portfolio. That I'm fine with. Hell, I'll just do it. Why not? Then we can follow up on it. I'll do it right now. I'm going to go into my trade tab and I'm just going to add a little bit of this in there. This is because, okay, so once again, I want to be clear here. I'm using the leverage one so I can use less capital. I'm not actually thinking that it's going to go, try to make more by leveraging. I'm not doing that. I'm doing it so I have less money going in to this. All right, so I'm only doing like a, let me see here. Yeah. So if I did a 1% position, that's 3%. I'm not really willing to do that. So I'm going to do about a 0.5% position, which is about 1.5%, which is kind of like a pilot. Basically nothing. But whatever. It's something. So now I at least can kind of watch it and see what it does. Because if we get continued movement to the downside, like say if it comes another 2 standard deviations tomorrow, right, that ain't going to affect me much, but that'll give me more opportunity to potentially scale and then try to fade the bounce. So I did that. I added a little bit of exposure now into semiconductors. There we go. Cool. Cool. And I'm still looking to do SPY, but I want that to be lower. So maybe semiconductors has to break down in order for me to get SPY to where I want it. Chris, I mean, you come down to that conclusion itself by looking at the beta of the product, but typically, like, I don't want to really risk more than every trade that I take. I don't really feel comfortable with losing more than 1% of my portfolio. In fact, it's typically a lot less than that. It's like 25 basis points. Right? So think of it in terms of this. If you have a $1,000 account, let's make it easier. Let's say if you trade a $100,000 account, just do your own math, right? You know, if you lose 1%, what's that equal? All right, $1,000. If you lose 25 basis points, which is a quarter, right? That's equals what? $250, right? So I'm in that kind of range where I'm like, okay, I don't mind losing 25 basis points a trade, 50 basis points a trade. And then like when I'm doing ETFs and stuff like that, I can expand that out, right? If I buy a SPY, I'm okay with losing 1% or 2% of my portfolio if I buy the SPY. Because it's not going to happen in like a blink of an eye, right? I mean, it will if I buy a full 100% position, but that's not what I'm doing. Okay. So when I look at this, I'm like thinking to myself, okay, where am I going to manage the risk from? Like, right? If I only wanted to lose 25 basis points in my portfolio, if my stop loss is right here, I mean, it would be a pretty big position and I'd have to be very extremely accurate. But if I come out down here, I'm like, okay, if it breaks down like here or here, right? $4 or $5. So I did it off the 5. am I willing to lose, 25 basis points in my portfolio, but then give it the room all the way down to here so I can like not worry about it? That's what I'm talking about, right? I'd still lose the same, right? If I got stopped out here or I got stopped out here, I'd still lose 25 basis points in my portfolio. But the only way that I'm going to stay in the trade longer is by giving it more room to breathe and readjusting the position sizing that way. So have an idea of how much you want to lose in risk per share. It's crazy to think, like, some people like risk 10% on a trade, like per share. Like that means if you lose 5 trades in a row, you're basically losing 50% of your portfolio, right? Give or take a little bit there, because obviously it changes as you lose, or if you buy them all at the same time, right? So that would be the case there. So even 5% is a lot, 4% is a lot, 2%, like people don't understand that, like that's pretty crazy. Like that's a lot, right? Especially if you keep doing that. That's where you can make more money. But, I'm focused in here on like a 25 basis points to 50 basis points to 1% of my portfolio on a trade. Okay. All in.
Further on that
definitely
story,
beta adjust. Yeah, because Chris, because like you can lose 50 basis points by setting up a position right here to your stop or down here.
Representing the US in those talks.
Down here, it ain't going to give you any stress because you're going to like, if it comes all the way off and you're like, oh, I'm down 50 basis points in my overall portfolio, like, yeah, but it came way off. And like, you're also say, but if I bought here and I ignored my stop, imagine if this was your stop for 50 basis points of losing and you let it go all the way down here. That means that would be 50 basis points. That'd be 1%, 2%, 3%, 4%, almost 5% of your portfolio because a mismanaged trade. That's how things can really kind of get out of hand. Get out of hand quick. No, we don't want that. You know what I'm saying? Okay. Market ain't doing anything here. That's fine. This green line coming off heck hard is not a wonderful look. It means 672 kind of still there in play. Gosh, man, is this one of those days where it just kind of goes sideways and then all of a sudden just slams into the close? I want the slam to happen now. Or is it one of those times where we hit the weekly expected move, but it's in like the aftermarket? Yeah. Wendy's and mRNA. Yeah, we can look those up. Let me get some more water. Take a quick break. I'm gonna pull up this chart and this chart for y'all to watch. Actually, I'm gonna do it NQ because I like this better. So NQ, just so we know. I'll be right back, but so this VWAP was from this kind of handoff here, and it's kind of getting hung up. So above this would be better to come back up into here, potentially even retest that VWAP from up there. But the market's pretty darn bearish as far as market net flow goes. Then we got our lower weekly SPX right there. Okay, so I'm going to put this right there, and then I'm going to go hide myself. Skibbity, skibadoo, skabung. I'll be right back.
Now seeing settlement for Brent, that's up 76 cents at $59.68 per barrel.
I hate when that happens. All right, I'm back. Okay. All right, we're getting back above that VWAP. Fortunately, it didn't come down to my level on SPY, but IWM did get down there. IWM did. IWM got pretty low, and it's near that area. Considering it's underneath the weekly implied move, I might just do a little bit of IWM here too, as it's underneath that weekly implied move. I prefer it a little bit lower where that VWAP is, but you know, I'm gonna buy this one in my actually shorter term account. So this one's not going in my USIC account, but I do want a little bit of IWM now. Just trying to get some inventory. So I got some IWM. Didn't get my flush that I wanted. That is what it is. Trying to break above this VWAP. If we break above this, this can open the door for higher moves. Market net flow. Market net flow looks like crud, but we did lose convergence. That's positive. And then the red line coming off is good too, but now we need to see this green line kind of flat to go up while that red line goes down or, you know, flattens out. So I guess I'm just going to be patient on the S&P 500 stuff. It is what it is, but I do want a little bit of IWM, and the only reason I'm doing that now is because I feel like I'm going to forget or miss it potentially if it does come down here. So I'm going to start, and then if we can get down here, I'm going to see what it looks like to potentially buy back through. But that we're already at the weekly implied move. I'm okay with just doing a position to start it now and see what happens, right? We're below a declining 5-day. We're pretty extended from it. So just be aware if we pop up in the near future, it could still be a lower high, okay? Below a declining 5-day. So, you know, it's going to be one of those more tactical type trades here. If it goes in my favor, obviously. Yeah, we still got an hour to go, and it could still happen, that's for sure. So AVGO, this one did bounce from the 2 standard deviation level, kind of near that daily volume weighted average price. So for anybody that played that, cool. ARM, I don't think did it yet. Yeah, this one's still kind of trending lower. Not doing anything. Semiconductors, a little bit of a pop from the 2 standard deviation move. That's why I kind of like buying them when I'm under. You can get these little pops. Cool. I did do the semiconductor trade like I already just explained, but it's not like a day trade sizable position. So I focused in on the daily chart. So this move right here doesn't mean anything to me. Quite literally, it doesn't do anything. All right. And then, yeah, you never know. Maybe we still come down here. Once again, I would prefer it to happen now, today. But what I want typically never happens. So, got to work with the cards that I'm dealt. I'm going to pull up some of the as we're kind of just floating in and around this area. If we can hold above this, I feel like we can come into 25,000. This looks like a 25 point kind of move here that we can probably capture. Not my favorite type of setup, but it does have that look and feel that we can go for the round E over here at the 25.
The Federal Reserve has told the bank it has closed notices that demanded the bank improve counterparty risk management.
We'll go back over to some side-by-side stuff here, and this is AVGO. This is underneath the expected move for the week. So, you know, if this starts moving, watch for 340. I mean, that's always a possibility. This is a pretty substantial break today, but you never know. That can come right back in. Still got time in the week. I want to go to Apple. Apple came into it the other day, bounced a little bit, still below declining 5-day moving average. We got NVIDIA. Still well within the weekly implied move. This is the weekly implied move here. It's down on the week ever so slightly and below a declining 5-day. That's why you got to be careful, right? Came into the declining 5-day here, got rejected. So it takes a while for these trends to kind of fix themselves. That was NVIDIA. We got Microsoft. Pretty much flat on the week, but it is getting back above the 5-day average right here. So it doesn't look all too hot on the daily time frame. But man, if we start to put in a higher low, like kind of how we did right here, and this starts to kind of shape up, perhaps that does open the door for a move back up to 484-ish. Okay, we had Google. That one broke its weekly implied move. That's a pretty substantial move in Google. This is probably what's holding the market down right now, is this guy. Yeah, down 3% now. Tesla's down 3%. Broadcom seeing a little bit of bounce. I mean, this to me is also a fade trade back into the weekly implied move. Let's see here. Kind of just broke these lows. So I really would be kind of all over this if the SPY was actually down by its weekly implied move here too. That'd be crazy. Would love that. These are the opportunities, man. If you're looking for pullbacks in this market, like, and you're looking for strong stocks, like these are kind of outsized moves. And what I mean by that is, I mean, just take a look, right? If you go from the high down to the low, right? And this candle right here, right? It engulfs all these candles right here. So this is like the most turbulence that we've seen since this kind of run up here. This day right here was bigger. So these are the type of things that I'm like, okay, yeah, I don't mind fading this type of stuff. I really don't. Let's see here. A second. Yeah, I don't mind buying Google. Pump our exposure back up. I'll give it just a little bit more time. And once again, just so you know, when I execute into stuff like this, once again, it's not like I'm not looking for an immediate go in my favor. Sometimes that happens, sometimes it doesn't. But what I definitely don't do is I don't oversize a position. I don't oversize positions. If you go too heavy, you're going to get tripped up. If you go too heavy, you can lose money, and yet I can still end up making money. And we take the same trades, right? That's how it goes. That's why I hate alert services so much. We can take the same exact trades, but your sizing is incorrect, and you could be destroyed. Detroit. All right. I want to just see here really quick. I want to make sure, because this is pretty, is this a 2 standard deviation move or no? recall getting an alert for it yet. $295.89. I mean, we're right there. I feel like I'm gonna not get that, but if it comes down to this 289.95 level, oops, that's the 2 standard deviation move. I would like it down there. Even if it's a smaller position, I would just prefer it down there. So. Dan.
Update for LVMH. CEO on succession plan says, I hope I'll make 10 more years. That's in a CNBC interview.
Okay. Let's see if it can get down here. Kind of. I kind of do. This is me getting really picky for... This is me getting so picky for absolutely no reason right now. I can just buy it and just forget about it. Whatever. It's not the size of the trade, it's how you trade. It's true. What is this? Oh. Okay. All right, let's go back over here. Sometimes no trade is a good trade. Go back to tick chart. Still not getting anything here on tick readings. We've had only one frothy reading. Okay. Market net flow. Oh gosh, man, it just looks horrible. Let's see here, 672, 673. All right. I feel like that can, 673 holds as resistance. We come down back down to 672. That's right here at this low. Okay. All right, make it happen. Break down. Go to 672. Yeah, stanker. House of the Rising Funk, yeah. I'm kind of like right there with you. I get too picky and miss things, but when I like lighten up on like, when I just think about things in terms of just like, I'll just take to just kind of get over it, I just do a smaller position. I'll take the shot. All right, here comes that 672. Are we going to break down in ticks? Are we going to do anything here? That would be so cool. Let's go back over to Google. Hey, where did my line go? There it is. Of course Google's not going down there. Of course Google's going to just reverse and try to head higher. Leave me in the dust. Why? I mean, why wouldn't it? Why? I mean, why would it? Why would it give me what I want? It's not going to. I know some people mentioned some names to pull up, but I'm just kind of like focused in on here because I do want to execute. And I feel like we're like on the cusp of something to actually take place where I can execute. Like I said, I have a little bit of IWM, not in my main account, not my swing trading account. I mean, this will probably be a swing trade, but it's not in the United States account. United States Investing Championship account. I did a little bit of ARM. That's down like $50. These little mini positions. It's hilarious. Took one scalp of futures on live stream, and then I was looking to do SPY. I'm looking to do Google. IWM. Started spot here underneath the weekly implied move with the hope that we can kind of come down to this area and start to see some strength. So I'm starting it off right now. If you're wondering why I'm doing a lot of fading, it's because the conditions are for that right now. We're outside of the weekly implied move over here. I think we can come right back in for Google. That would make sense. I was looking for a stronger move, but I didn't get it. We'll see if it comes. And then another reason is because we're in negative gamma. We're below that gamma flip line. It's way up here, which means buying activity begets buying activity. You can see a shot right back up. But then sell side activity begets sell side activity, which is what we saw today. And my guess is a lot of this actually probably came from some systematics as well. So it's going to be interesting to see kind of what vol control funds did today, albeit vol didn't really take off that much higher. And then also CTAs, maybe risk parity funds. Yeah, a lot of time just looking at the screens. It's fine for me. It's what I do. All right. Google, we're going to make it. Gosh, we're right there. Just crack under it. Just crack under it. This is just wonderful. 672, pretty big level there. So, you know, under 672, we can potentially see a little bit stronger of a flush. If we can hold it, price will reject from that level and push up further, but you can see that down here at the 0 date level, this big old 672. So 672, right? If I was to just redraw this thing, I'll come down to 672 now. It's a currently big little area of focus. So here, you know, you can potentially bounce from it. If we start, you know, breaking from this, then it can act as a kind of a wall, like we can push and repel from that.
So for Comcast, CMC, SA did possibly value its media unit at $81 billion in the Warner Brothers Discovery bid, according to Bloomberg.
Market net flow, bearish. Red line up, green line down. Am I short? No, I'm not sure. I don't really short the market.
So it does know that Comcast offered to merge its NBC Universal division with Warner Bros. Valued the cable giant's media and theme park assets at about $81 billion, according to a filing.
No, I look for long setups. Is buying an inverse ETF considered going short? I mean, in theory, yeah. Like if you were, looking at SQQQ, you would be, wanting the Qs to fall down. That's one way around. Like if you do short selling, right? Like if you're in a 401k or like an account that doesn't allow for short selling, you use those ETFs, those inverse ETFs or inverse products. Don't get me wrong. I use them on occasion, but like, okay, so I'm up like 40 something, 45, 47, 48% this year to date. Maybe 1% of the gains came from shorting. Maybe, right? It was all focused on long setups and using zero. I didn't use leverage. I use these funds like the XXX funds, but I don't like use the leverage more than my account, right? So for example, once again, if you trade $1,000 account or 100,000 or a million, don't matter. I don't buy $1,000 worth of a XXX because then I'd be trading at 3 times. So my portfolio would be moving around like 3x. I wouldn't do that, but yeah. So I don't use leverage either. At least in my United States Investing Championship account, I'll get leverage going maybe sometimes on day trades, on occasion, sometimes, right? But I don't hold that overnight. I don't need no margin calls. Margin's calling. Thanks for subbing to the channel, everybody here. Appreciate it. Appreciate it. Appreciate it. We're just chilling. Chilling, watching markets. Now this right here, don't worry about those spikes. It doesn't mean anything. So when you get a sudden spike like this, it's like, what do they say? It's typically like an ex-dividend that kind of throws it. So just ignore the spikes. You can watch thereafter. Well, you go to the zero date and look where the concentration is. So this is the zero date stuff. It kind of always changes, Motorhead. So it adjusts. So right now the main level is at 67.35. So that's kind of like that main area of concentration, right? So 67.35 is kind of just below us right here where we're at. In the net gamma stuff, yeah, there's positions that are higher, and it doesn't mean that it has to go there. It doesn't, but it's more of like a level of interest to be aware of. Dude, I'm not getting the flush. I'm not getting anything. It just came off, and now it's coming back here. So I guess if it shapes back up, try to look for a move up higher, but yet market net flow is still suggesting, the green line's up a little bit here, red line's down, but still not the greatest look. Go back over to NQ. I do notice a little bit of a trend maybe to keep an eye on from this little pokey point right there to this pokey point down there. Okay, so that could be potentially something to watch for. If we can break above it, open the door to kind of try to come and get this VWAP over here. Not a great setup, but still. Something. So market's moving a little bit here. I'm assuming that it's coming from some of the semiconductors. Little pop there. There it is right there. Broadcom making its way back to the daily implied move. Sorry, not daily implied move. The, help me out here. VWAP. Energy up 2% on the trading session today. And Google is still kind of holding these lows. So Google, I might get my level down here. Do I plan on closing ARM today? Probably not. It's not even a day trading size position. This is it's such a small position, so I just kind of have it on. Like it's flat right now still, or okay, it's up like a few bucks, but I'm not. It's the stock can move 50%, and I'm not gonna like lose my like face over this sort of thing. Okay, so it was really just to have some exposure and just to give an idea of what it might look like if somebody else trades it like this. So let's go to ARM. Right. We're underneath the 2 standard deviation move. I'm basically flat on the position. Broke a little bit of a trend here. Okay, so maybe I'll try to scale it, off over at daily VWAP. But right now, when I'm looking at the daily chart, this was a pretty extravagant move. So I think it's possible to see some sort of a bounce, at least in the near future, with something like this, just like I do with Google. Now, Google, it's a much better looking chart, right? Much better looking chart versus ARM. So yeah, you got to be somewhat aggressive to take the profits off, but I don't know, when I'm on a live stream, like I can't really do the size that I typically do day trading unless if it's maybe the prop firm, because I got to focus. Like I can't do both. It doesn't work for me that great. In fact, I should probably just buy Google at this point. What are we talking here? What is this little move down to here at 35 basis points? Should I wait, or should I just say screw it and just move on from Google and just buy a little bit? I still want SPY down lower, but won't give it to me. Absolutely crushed trading futures today. And I was hoping for another setup so I can bring my Tradeify accounts to be to pass these new evaluations. I'm $90 away from doing it. $90 away, this is what it looks like. For those that don't know, I did Tradeify. I bought 5 of their accounts for $2,500 a while ago, like beginning of this year, and I took those 5 accounts and got $80,000 in payouts. Then they cut my sim profits. I couldn't do that anymore. And then they opened these new accounts called select accounts where I have to go pass a test, and then I qualify to be a sim payout again, or, that's what they say, but they might bump me to live again, which would suck. But they allowed me to do this, so I'm trying to pass the test right now. So this is the performance right now with those 5 accounts, and I'm about $100 away so far. So I did it slow. It's not like I raced to get these passed. And trust me, I'm not going to rush the end too, because I don't want to blow up the account from getting this close. I'd totally spiral out of control if that was the case. Correct. Yeah, I do not trade options. I think I maybe traded like an option contract maybe 2 to 3 times this year. So not much. When will I achieve futures? I did in that one video for the tick chart. I don't know. Maybe I got to do something separate. I was telling people earlier, like, I don't know if you were here or not, but I was thinking about potentially doing a separate tier on the platform to just do its own like futures room. But that requires a lot of time and effort, so I don't know yet. But I can make a potential video that walks through, some of this stuff. Damn, PG&E would be moving today. Look at PG&E. I'm sorry, PG&E is PCG. Look at PG&E. Hello. The names that are moving are the ones that sold off. Rotate. Rotate. Rotato. It's like potato, but rotato. Yeah, doing it live. That's kind of what I was thinking. Wendy's. Yeah, somebody had mentioned that earlier. Maybe that was you. I mean, out of the gate, Doesn't look too good at all. Yeah, it doesn't look good. It just keeps on breaking lower. However, that's the thing. Holy moly, man, this thing got absolutely obliterated. A lot of consumer staples names have. A lot of restaurant names have, actually. But, I mean, this thing is so bloody beat up, right? I mean, if you're thinking about an investment, okay, maybe. Like, is Wendy's going anywhere? It's a pretty big company. Got a lot of chains, right? Weak stocks typically get weaker, so you'd have to be okay with it going down lower. But, I mean, this is pretty crazy. This is this is down what on the year? Oh, 50% on the year? That's wild. So its price action is getting very tight here. So if it does break up, maybe you get a pop back up into and around the declining 200-day. But overall, typically what happens when you get these tight price actions, it breaks up. If it's declining, it can pull back in and it tries to like base out and then break higher. In this case, it did the same thing, right? It tightened up, got back above the 20 and 50-day, saw a nice squirt higher, and then it rejected. So yeah, I zoom into this, I'm like, okay, yeah, maybe, we're near that area where we see a pop. Awesome. Okay. But just keep in mind the overall trend. You're trying to swim up a river here. And for investors, I guess that's not really like a big deal, right? I haven't looked into the fundamentals of this company at all. But for investors, it's like, that you can get stuck sideways for years. Right? So plan out kind of the time frame-ish that you want to hold. And if it's shorter time frame, yeah, you look for the tight areas of contraction. You buy it. If it pops up, you update your stop loss and just see how long it can go. And you're typically more aggressive, just like you would be more aggressive swimming up a river. You would be working harder to swim up the river, and you'd probably have to stop for breaks faster. Okay. Got 30 minutes into the closing bell. We're getting a little bit of a push lower here. Are we finally going to flush down? Like I thought it was going to happen. The flush, but it's going to happen at the very last second. Wouldn't that be just wonderful? I want to thank you so much for this opportunity. How much is the S&P? S&P 500 is down 1% today. Let me see what so my portfolio is down now. Let me see what it's down. I mean, I'm like a stone's throw from all-time highs. Let me see here. I'm watching this on my screen here too. My United States Investing Championship is down. My other stuff is up. Oh, my stomach is growling. I'm down 30 basis points. That's what I mean by I have such low exposure. The S&P 500 is down basically 1%. The Qs are down 1.6%. And I'm over here down 30 basis points. So it's times like these that I need to start looking to add exposure back. Because clearly I'm running light, which is good in days like these. But also, I kind of need to take advantage of days like these. Because if the market wants to turn itself back around and just keep going higher, it's going to leave me pretty much in the dust. So I need to be thoughtful and tactical. I will say, look at Qs. I'm not really interested too much in buying Qs here, but it is pulling from this low to this high into that golden zone. That 61.8 retracement if you use fibs, whatever. The weekly implied move for Qs, the lower weekly implied move is at 599.53. So we're still kind of lower on Qs. 599.53 is basically the 61.8% retracement level. So actually, if Qs go just a little bit lower, I'd be okay with getting a little bit of Qs. I'm okay with doing SPY down here. I got a little bit of IWM. And I'm well aware that there are catalysts that can just rock this market. So I got to take that into consideration when applying this. But this is definitely a day that I can't just kind of sit around and not do anything. I got to get exposure back in on days like these. I do. Yeah, Micron coming out after the close. It's about a $20 expected move from Micron. Okay. It's bouncing back already, so we're going to have to readjust these expected move levels. Came into its lower implied move on the day. We have about $20 of expectations for Micron. What ended up happening with Soxol? Nothing. So this one's kind of going size. Oh, sorry. I'll use SMH. Because I have the 2 standard deviation moves. So semiconductors came down to its 2 standard deviation move here. I mean, I hate it's lower lows. Sorry, lower highs. So I prefer seeing more stronger moves to the downside. But I mean, this was strong. Don't get me wrong. But the last, middle portion of the day has been kind of going sideways. But that looks like it can move there. And then, man, we're just like right there. Right there. Shucks. I guess that arm position's kind of moving now. A little bit. For those that took that arm position, you should be up in the position now because we took it underneath the 2 standard deviation move. If you were day trading it, then you look to lock in. If you're swing trading it, just know that it's still horrible context. But yeah, I mean, this is a pretty frothy move. So seeing bounces makes sense. But that's up to you. Let's go back over here. We're kind of floating at that 672. Here's that level. Are we going to break down from it? Marking that flow still looks pretty rough. 670. Pulling into 672. 671 is opening up. This might be it. Let's do it. Let's go. I'm going to open up the tick chart. God, man, it's coming into the last 30 minutes to close. I knew this was going to be the case. This always happens, man. You get what you want, but it comes at the close, which is not a great sign. It's like hard to act, but whatever. If you're acting, you just got to, once again, consider the sizing. Tag the 672. Probably need to call it quits for futures trading today, so I won't be able to probably do in the last 30 minutes of any trades for the futures. But perhaps I can get some exposure into the market. Let me go back over to Google, see what we're doing over there, see if we got our level hit. Oh, man, I'm like inches away from all this stuff. It's so annoying. Come on. Coming into the final 30 minutes here. That's 672 held. Man, we are a stone's throw from that weekly implied move. It is that frustrating. Imagine if we didn't hit it this week and we came that close. I mean, that's 3 points away. So, you know, it's a $7,000 product. I'd consider it a tag, but still, it's not technically one. I guess it depends on how you calculated it. Some people's calculations might be a tag already. Mine is not.
So note from Merck, MRK, US FDA is moving to fast-track reviews of 2 Merck drugs under Commissioner National Priority Voucher Pilot Program, according to Reuters citing internal documents. As note, Merck's cholesterol pill, enlicitides, and cancer therapy, SAC-TMT, has been tapped for the program.
Right.
FDA expects respective April and October, November submission dates for enlicitides and SAC-TMT.
So I submitted into Google. I can't wait for it. I need to get over it and stop watching it. I think it can go down there still, but I'm just going to go ahead and submit just some exposure into Google. So small position, not pilot, small, not medium, not large, a small position. One step from pilot. And if it can go down further, I'll probably build into it, to be quite honest, given the context of the daily chart. But we basically came down to a 2 standard deviation move, still might hit it. Maybe perhaps even down here into and around this 291, maybe even the 50-day, and I'd be looking for a bounce back up. But I went ahead and just started it now. I can't sit there and look at it. It's getting frustrating. I did start one with IWM, and then I'd like to do SPY, but also wanted a lower shot there too as well. I got to get exposure into the market, especially taking advantage of moves like today. Got to start getting it back. All right, so we got some googies. Healthcare was a great trade. Healthcare was incredible. This was awesome. Healthcare from down here up to here. Boom. Wonderful. I even have a little bit on still, but it's like not much. That was great. That was when technology came off. So we kind of rotated out of technology. See how this kind of came down? And then we had healthcare rotate into healthcare. I'm not interested in XLK or, I mean, kind of the Qs in a way, but I would prefer lower in Qs. So I'm kind of more interested right now in IWM. Specifically a little bit lower. But I do have a position now in IWM. I just got some in Google. Okay. I think that's probably pretty good for now. My account today was down like 30 basis points, at least at the time that I pulled it. Yeah, about down 30 basis points. And the S&P 500 was down over 1%, and then the Qs were down about 2%. So we saw a lot of kind of larger moves today, which is nice because now I can do the fade. And you might be thinking, well, why would you be fading right now? You know, the market's, correcting, whatever. So we started getting more to gamma neutral. This yellow line is the gamma flip line, right? And when that happens, I start to look for trades that set up like this, right? I'm typically a breakout trader, right? I look for stocks that are contracting, looking good. But I know that if you're underneath the gamma flip line, you get more fake out, shakeouts, whipsaws. So my strategy and my position sizing changes when we start cracking under the gamma flip line. I look for names that have been getting cracked, going lower, that are extended. And I look to try to do quicker fades. That's how I approach it. So my strategy changes when the conditions change. My position sizing changes when the markets change, right? Conditions change. All right. Are we going to get this? Are we going to get to the low? Are we going to do it? Let go. We got about 20 minutes left. Do I think Avago is looking better than Google? Okay, so remember, they're different products. The big difference here is AVGO cracked lower on an earnings report and it had follow through. So yeah, you typically get consolidations. Just like if I was to look for a bullish move, I look for the consolidations on earnings and then I try to play follow through. Google, let's pull up Google. Google earnings move came up, consolidated, went higher. And it's pulling back now. So Google looks stronger more relatively than a lot of these semiconductors name, but that doesn't mean that AVGO, which is kind of a higher beta for the most part, can't like pop right back up and make a bigger percentage gain. But keep in mind, like, right, if I was just to look at the the 50-day moving average, we're below it, right? Yes, it's extended, but we're below it. Is Google below it? I can't remember. No, Google's still way above it. Right, so the trend in Google is technically stronger here. We're going to get a flush right at the end down to the lower weekly, aren't we? So obnoxious. But I love it. I love it. Market never gives me what I want, but I'll still take from it. I'll still take from the market, even though it doesn't give me what it wants. I'll find a way. You up 1.84%. Hi-ho silver. Nice. Oh, yeah, silver, man. What a move today in silver. Look at that thing. Look at that tang. That's a move. That's crazy. What's going on? What's going on in this world to see silver priced higher than a barrel of oil? Oh, weekly candle not so good right now. Let's take a look. SPY. Yeah. Coming right into the 50-day moving average. I mean, look at a lot of chop, a lot of nothing. Let's take a look at the VIX again, because the VIX, man, is just telling me something different today. It's just like, wake up, like wake up. It ain't even budging. Volatility is just like, meh. And I say meh because it is shocking that we're this far underneath the gamma flip line and market's been kind of just doodling down, but there's been no response. And the only thing that I can think of is the market doesn't see any real risk right here, which is weird because we have the CPI data out tomorrow. We have option expiration. So let me go back over to SPY. It's the market pricing in tomorrow. About $5.84. That's a big move. $5.84. And we're already at the weekly lower, basically. So in theory, if we go hit the upper daily tomorrow and we say if we close right here, I mean, we could be right back up here on a 1 standard deviation move. That would be well within market expectations. If the market doesn't like what it sees, I mean, we can crack underneath the weekly implied move. That'd be a pretty big crack. That would freak some people out for sure. That'd be a big move. So, got to be prepared for both situations, right? Which means for me, I am more long bias. I like to fade, but I'm not like confident where I'm like, dude, I'm going all in right here. Absolutely not. I'm not even like 50% confident, so I'm not even put 50% of my portfolio into something like that. See what I'm saying? But I do want to act. Today is definitely a day to at least take some stabs and act. So I did. SPSS, for long swing, long trade, do you have a % down of a stock where you're choosing DCA? No, not really, because the beta of a stock is different with every stock, right? So I can look at something like, I don't know, what's a crazy moving name? Carvana, right? Right. So from like, if I could look at the daily time frame, like if I was thinking in terms of percentage, right, just from this high down to this low, that's minus 3%. Right, which looks like nothing, like it's going to move 3% a day. But if I look at the SPY, right, and I say, oh yeah, 3%, from this high I have to come all the way down here for 3%. So Carvana moved 3% today, and S&P 500, right, from that high just down here, like it'd be minus 3%. So it's not really a percentage per se. It has to be beta adjusted, and it's always adjusting based off of what I want to lose per trade. And it's typically from a single equity, it's typically anywhere from 25 basis points to 1%. Right? I don't want to lose 2% of my portfolio on a trade. And if I do plan on losing 2% on a trade, it's going to be set up in a way where the risk level to lose 2% is much lower. It's not going to be like, I'm going right here, and if I go down here, I lose 2%. No, it'd be like down here. I'd lose 2% of my portfolio, and the S&P 500 would be down 3% or 4%. Does that make sense? So I'd adjust it. I would adjust. I have a video, people, on this type of stuff, on how to create position sizing and everything. It's a great video. It got like no views. And I walk through like all of this in a structured format. You can type one in the chat if you want me to post it on here, because maybe it got lost in the ethos. All right, I'm seeing some ones pop in there. Give me a second. Ethos, hey. That's funny. That's good. You did see it, Shanks? Okay. All right, give me a second here. Let me find it. People are listening. You're really listening. Let me make sure it's this one.
My
Commercial.
name is Whitney Allen.
Yeah, I made this 4 years ago. Uno. All right, here I'm posting it as I close out of my stuff. Ready, set, here we go, post. End of day pumps. Yeah, maybe. Market net flow doesn't really suggest that. It doesn't really give me that feeling, but that doesn't mean it's off the table fully. I'd feel much more confident if this green line was just kept on cranking. Like, yeah, we'll probably get a little release of pressure to the downside. Hasn't been the case yet. We still got about 15 minutes, and I guess I'm going to stick around for Micron. Zim Micron earnings. I'm going to pull it on Twitch and type my edit. I'm going to edit my title to Micron earnings live. There we go. 7,000 end of year SPX. Yeah, maybe. I mean, it's where a lot of focus and concentration is at. Maybe we're just waiting to get through option expiration, and maybe Santa Claus rally takes us there. Like, I'm open to it. That's why I'm trying to get some exposure just in case, but not get enough to be like, hey, I'm super confident that's going to happen. I got to be okay if the market just falls in on itself, which it's kind of been doing. It's funny, XOM had like a 2 standard deviation move to the downside just the other day, and now look at it, it's a 2 standard deviation move to the upside. Talk about shake and bake. So this was here. This move was 2 standard deviation lower. Bam, ripped right back. Hello. Oh, man. I was really hoping to see a press lower here, but that 672 kind of held. Yeah, we got jobless numbers coming out tomorrow. I know we have CPI and inflation data. There we go. Initial jobless claims. And then on Friday, consumer sentiment and some existing home sales. Woohoo! Santa Claus is coming to town, whether you like it or not. Whether he brings us coal or green candlesticks, it's yet to be seen. All I want for Christmas is a green candlestick. A big green candlestick. That's what I want for Christmas. Am I short the market? No, I'm not short. I'm not short the market. I'm looking to try to get long, but I was looking for a move down to the lower weekly implied move today. I took a position in Google. Like I had to, the thing is, so like if you look at the S&P 500, so what I was telling everybody earlier, see how it's down 94 basis points, about 1%, and the Qs is down 1.6%. So my portfolio today is down like 30 basis points, maybe less now. So I'm trying to explain that my performance is outperforming the market, but I got to get exposure on days like this, because if it turns around, like I want to be a part of it. And when I outperform the market, when I get that down capture to the downside like I am today, and we get these 2 standard deviation moves across the board everywhere, like it's okay. Like those are the times in negative gamma where I'm like, okay, I got to start positioning in a little bit. Even if the market wants to continue to fall, I'm totally fine with that. Absolutely fine with that, because it's needed exposure. I need it. Look at, we're coming down that 672. Is this going to happen to me right at the close? Get the fuck out of here. That's funny. It's going to happen right at the close, just like we said, huh? IWM just hit its lower expected move for the day, and it's underneath the weekly implied move. Qs, it's getting near its weekly implied move. This is kind of where its weekly implied move is, slightly above that. Here's that crack lower. On Qs, it's coming in. I'm keeping an eye close now. Let's go. Let's go. Let's go. Let's go. Let's go. There you go. So let's see, man. Is Google going to give me an opportunity to add a little bit? No. Google's at my entry point. I did do small on IWM. Do I want to re-add into IWM? Let me check the daily. Oh, man, we're like right there. Kind of was hoping a little bit lower in IWM. So I'm going to keep IWM as is. SPY's coming off here. Come on, just get to it. Get to it. Get to it. All right. We're basically there. We're 2 points away. Pretty big flush there on NQ. Let me see my tick chart. I don't think I'm going to make a futures trade here at the closing bell with 8 minutes left, but I don't mind starting the position in SPY now. So we'll probably get that weekly implied move, but I just don't have the patience for it right now. So I'm going to start it off and start getting some exposure here. Edit it. What is going on? Why isn't it going through? It's not going through. Okay, give me a second. Proceed and submit. And why is it not working? All right, there we go. There, I executed into there. And it happened to be right there at the weekly implied move. So perfect timing. Good thing I got that set up. All right, now I want to go ahead and do it. Same within my trading account, the one that I don't get verified. I do want some exposure into the S&P 500 as well, just to have. So I'm going to buy there at the weekly implied move. And we'll see what happens now. So there you have it. Got the flush into the close. Kind of what we've been saying is going to happen. Unfortunately, I prefer to happen more intraday, but that's okay, I guess. We got Micron after the bell, getting my exposure back in the markets. I don't think we hit it on SPY yet. So SPY is still kind of off. So we might still come down a little bit lower here to try to tag this one. SPX did technically tag it, but I would still say it can come off down to here. And then let me go to, I want to go to, let me see here. Not Broadcom. Damn, Microsoft is flat on the day. Oh yeah, I want to see Google. Google almost hit its 2 standard deviation move. Didn't quite. So no change there for me. And then I want to just touch back on IWM and see if we can get down to the VWAP. Because if so, I'm probably going to just do the position there as well. Almost there. Man, it's so close.
Earnings after the closing bell today. We're going to look out for numbers from Micron Technology, ticker MU. Expected to report in about 5 minutes' time alongside the closing bell. EPS is expected at $3.84.
Palantir just hit a 2 standard deviation move.
$12.78 billion.
Trade idea, weekly expected. There we go. All right. Q's 599.53 is the weekly lower implied move. 599.53. All right, maybe. I guess I'll have to wait. I did get some Google, so that's fine. I'll keep that as is, and I'll do my SPY. I have some IWM. I got some Google. And now I'm up to, I'll have to check my overall exposure now in the markets, but at least that gives me now some exposure back into the markets. It protected me from today's day, 1.82% down on the Qs. SPY is down 1.1%. And I was down about now around 35 basis points on the trading session, and I get to buy in and get some exposure after a move like this. I am very happy with that. Cool. I'm going to go enjoy my feelings. Here we go. So SPY is not too far from it. It looks like it's coming down to its weekly implied move. SPX got there. Kind of slowly, slightly thereafter, or outside of it. Got 3 minutes left of the trading session. We got Micron earnings. I'll pull that expected move up momentarily. Pull up Micron. Oh, and I added a little bit of semiconductors too. I forgot. That's such a small position, but I did add some semiconductors too. So there's that. Micron. Okay, so we're looking at roughly at about a $20 expected move and some change. Bring us up to and around 246. Down to and around 205. And I'm not trading it myself, but that is what the market's expecting as far as a 1 standard deviation goes. You're saying Uber's, near its 2 standard deviation move. Yeah, okay. Getting a lot of, we're getting a lot of little hits here on our 2 standard deviation moves towards the end. Palantir being one of them. Palantir, I pull up Palantir. That just hit 2 standard deviations at 177.07. We're slightly above that now. And this has been pretty bullish. Obviously, it's been going sideways.
President Trump says he will not let anyone go through the Venezuela blockade who shouldn't be going through.
SPY is near its weekly implied move, and SPX did tag. All right, final minute. I'm done. I'm not going to be trading any futures here on any of these trades. I'm not interested. It looks like we're closing at the lows of the day for NQ. And it looks like we're going to come tag this weekly implied move, whether that's like after the close or whatever. I mean, we're like right here. So we'll see if we can get down there. Hopefully everyone survived today and didn't make any crazy decisions on today's price action, looking for V bounces. It just didn't give us the opportunity, really. Market net flow has been pretty bad all day. We did get that flush. There's the bell. Alrighty, so we'll go head over to Micron. We'll watch that, and then I'm going to hop off. So Micron earnings, about $20 of expectations and some change. These are the expected moves for Micron for those that are interested. That's one standard deviation of risk. One standard deviation, right? 68% time. So we typically go for those levels. Doesn't mean we can't break them, but that's typically where it goes. Hey, Vinny, thanks. The AsherBot sends it out an alert automatically.
Earnings from
so,
Micron
I mean, you can, if you don't see it come automatically, you can just type in the name in the channel and then it'll pop up, like wherever that might be, right? All right, here comes Micron earnings.
Micron adjusted EPS comes in at $4.78, beating the expected $3.96, and revenue comes in at $13.6 billion, above the expected $12.9 billion. Giving the guidance as well, Q2 EPS seen between $7.99 and $8.39, although adjusted basis seen between $8.22 and $8.62. General Street was looking for $4.78 on that. And the revenue, that's for Q2, seen between 18.3 and 19.1 billion, above the 14.3 billion forecast. Micron shares up about 5.7% after earnings and guidance.
I do have an update we're working on right here into the new year that will, it's pretty cool. I'm not going to talk about it right yet because we have to work through it. But I do have an alert coming, or an alert coming. I have an update coming for the alerts.
And Micron execution drive record fiscal Q1 results, including the highest.
It's going to be very useful, especially for anybody that's locked into $16 pricing or $9 pricing.
$5.73 billion in the prior quarter.
It's wild.
And up from $3.24 billion in the same period last year.
All right, so good reaction so far off Micron. We're close to the upper expected move, but the expectations was about $21 of movement. We're almost there. We'll see. ARM worked out well for you. Good stuff. Let me go check on ARM because I have a position. Yeah, that was nice. It came right kind of into the daily VWAP right here. So you play the 2 standard deviation break, kind of move higher. I did that with PDD today. That was pretty cool. I did it over here. And where did it close? Closed basically at the 2 standard deviation move. Oh, slightly. Well, it's there now, but. All right, so what are we doing here in the after hours SPY? Moving up here ever so slightly.
Between 66 and 68%.
We'll take a look at semiconductors, see how they're responding. We'll look at SMH. See kind of that weight. So we're seeing a pop back there on Micron earnings. So cool. I mean, awesome. Right, came down to the 2 standard deviation move. Micron earnings help do this move higher. NVIDIA, not much movement there. And then AVGO, not much after the bell either, but still both hit some pretty big moves. S&P 500 hit its lower weekly implied move. SPY, not too far off of it. Back at that 672 right here after hours. Let's go back to Micron. Once they have the call, like you never know what happens, right? The call can bring this thing right back down. We don't know. But currently it's holding up. All right. Nice, FS.
I've seen a bit of upsides in the indices after the Micron earnings and guidance. Micron up about 4% now, just pairing some of the peaks, but still seeing decent gains after that reports. Was giving a helping hand to the even S&P and Nasdaq futures.
Do I think it'll fill at 6,600? I mean, it's possible. I don't want to rule it out, but I prefer to just be more focused on the long side, and I want exposure just in case if we don't go down there. But I don't want too much exposure as to the point where if we do go down to 6,600, it's going to actually hurt me where I capitulate. So I'm open to the ideas of lower prices, and my portfolio is positioned for that, but not to gain. It would just be to lose less, right? Didn't quite pass my evals for Tradeify today. I'm about $80 away. Bummer. But that's okay. Slow and steady. And my other accounts, though, are in the money to be paid out, and that'll qualify for a nice payout there. I don't know if I'm going to be taking it right yet because I'm kind of trying to build a buffer, but sometimes that's the best time to take it is when you make it. Just take the money out and then put yourself on blast, right? And if you break it, then it is what it is. At least you got some money out. All right, y'all. Thank you for tuning in to the the live stream today while we looked at the stock market. We're kind of floating up here. Let's see if we can tag it. But thanks for all tuning in. I don't want to reiterate again what I did. So if you haven't seen what I added and what I subtracted and so forth, you can always check the stream. Gotta sometimes take advantage of days like these, especially if you're not blown up by the day. If I had too big of positions, I will say that I probably wouldn't have added. I probably would have had to subtract. So, trying to do my best. It's not always going to work out this way, but when it does, awesome. All right, y'all. Yeah, I guess I definitely gotta get a little rest here. All right. I'll see y'all later. Appreciate you tuning in. Probably won't have a stock market brief show out tonight. All right. I'm off. Thank you. Toodaloo.